share your gems. We have amazing guest speakers that are going to be with us today. We see they're here on the call already, and they're going to give us insight. They're going to give us things that they've learned, the journeys that they've gone through, and insights for us to implement as we are going out to invest in cash flow, right? So as you see the lineup that we have Chloe, Colella, we have Korey, MacKinnon, we have Kory Miller, we have Shaq Hall, we have Natasha, and this platform is something right now we're doing on a monthly basis, but if the community supports and we get everyone on board, we want to continue to do this every month, and even if we even step it up to bi-weekly, I'm good to do that. Everyone's in the comfort of their homes right now, so you didn't have to go anywhere to be a part of this session, right? And you're going to get to learn so much. You're going to get, so much. And I noticed that we have quite a few of you that have been on multiple sessions. So that's really good to know that, the content is actually connecting with you. You're seeing value in what we have. And believe me, we are going out of our way to connect with these people and make sure that, hey, you get to even ask questions. That's a beautiful thing right here on Zoom. They're right there with you. Post that question, they see it instantly. We love in person, but in person you have to kind of find your time to get to them after when everyone's swarming around them, right? To get your few minutes in for your questions. So, oh, okay, it says okay, you can hear me now. Okay, all right. Okay, I see. Okay, good stuff, good stuff. Right. So, my name is Richard Addo-Kessie. Right. And I'm a real estate agent in the GTA area, Brampton, Ontario, located. I work all over the GTA, but Brampton is my home ground, right? But investing is something that you could do worldwide, right? And really the principles in investing in real estate, they apply worldwide. So, we want this to be a worldwide thing. That's why we're online. We want everyone around the world. Our past sessions, we had developers from Calgary, from Florida, right? We have, people from different states in Canada and US, and eventually we're going to go all abroad, right? So just to start off the session, I'd like to really just give a little insight on, what I do and, what I'm about and what my passion is. Number one, my passion is about service. Right. And with service, I developed this program called the Mind Assistance Program. Right. And the Mind Assistance Program is a program to hold you accountable. We all have goals, we all have dreams, we all have aspirations and things that we want to do. Right. But and we have the literature, we have the mentors and the experienced people like in the session that could give you action items to go out and do. But that's the one thing that most people are always missing. They get pumped, they get amped, they want to go and do something, but the next action step, they don't know what to do next, right? So if you're excited after this, where do you go from here, right? And the map book is a guide, to hold you accountable to doing the things that you said you're going to do, right? So just going on the site, pretty much all we want to do is we want to actually sit with you. We have our coaches on there that just more want to get your vision and what you want to do in your life, and see whether this program will be a good fit for you, right? What we do is we go from the year to the month, right? So we have our affirmatory declaration, which is a big picture, for you to have that written in your map book. I have my map book with me right here. So we have our affirmatory declaration, which is the big picture. What is it that you want to do? What's the big picture, right? And then we have the next session, which is the year. So, okay, this year, what in point form, tell us what you're going to do this year, and there's check boxes for you to accomplish them once they're done. In the month, we have the focus 11, where you focus on 11 aspects of your life, right? And you're going to do something each month in these 11 aspects of your life, right? And then we have the books read. What books are you going to read, or audio books are you going to read? How you growing your mind, right? And then we got this week, break it down to, and then we have our critical 7 each day. So every day we're accountable for what we say we're going to do. All right. And, that's what the map book is. It's just a tool to what you're already doing, right? And it's more an accountability program. So we have an actual 30-day accountability countdown to where if you're not plugged into the program, and it takes 5 minutes to go through the map book, to read your map book, but if you're not willing to do that, for 5 minutes a day, then we just remove you from the accountability group, right? Because we want to be on a high frequency. We want everyone to be striving for their goals, right? And to set that up, it's just a free mind map session. You just click on here on the website, map book program. You'll see in the text area, right? And if you want accountability, then this is a program that you're going to absolutely love. So let's get into it. We have our speakers that are here with us. And we had the schedule that was sent out to the speakers, but we had to kind of make a little quick adjustment because our first speaker just notified me that he's just running a little late. So we're going to bring in our mortgage specialist. I see her there waiting patiently, for us. Chloe, if you don't mind unmuting yourself, please introduce yourself and welcome. Welcome to the session.
Thanks so much. So my name is Chloe Colella. I have been a mortgage broker for 11, almost 12 years now. This is my second career. I was an analyst, a financial analyst prior to this position. I have 4 children, and yeah, I'm actually the co-founder of the Daily Gratitude Journal. So just like what you're saying, Richard, in terms of frequency and mindset, that's a big passion of mine, and gratitude and just being grounded and grateful for things that you currently have allows you the space to bring more in. So very, very passionate about that. And it very much goes hand in hand with that entrepreneurial status, right? Or job. So yeah, that's a bit about me.
Okay. So Chloe, talk to me right now. You're a mortgage broker, as you mentioned, right? How long have you been doing that for?
So almost 12 years.
Okay. And I see you have so many things that you're sharing on your page, like so much insights. Right now, obviously we're going to go into deep discussion on how's the real estate market, right? But just from your lens, right? I want you to, share what you feel, is of value for this audience to actually hear right now. Things that they could take away with them for when the session is completed.
Yeah, absolutely. So I think the key here, like there's so much that we could talk about. The rates and the real estate market and the mortgages or mortgage space has been, kind of flipped upside down the last couple of years. It's been a little bit of a difficult space, I guess maybe even last year. But I think that now that rates have been sort of dropping a bit and kind of regulating to where they should be. So in terms of where we were, obviously they were quite low, much lower than where they should be. And a lot of people had a hard time to sort of like understand and grasp that they were now so much higher, right? So now we're starting to regulate the rates and they're starting to become somewhere where everybody's had time to digest where they are and where they sit. They're actually very good right now. So I think the key with people is whether you're trying to purchase, refinance, renew, buy an investment property, knowledge is power. I think you have to understand where you are today to be able to determine where you can go and what you can do from there. So education, in my point of view, my Instagram is strictly education and obviously a little bit about me personally, just to be able to resonate with people. But education, like they need to understand, and you have to simplify what's out there because there's so much out there in the media, so much information that doesn't necessarily pertain to everybody. So people get very confused and don't understand, and then they get scared and don't do anything. So the way I kind of work with people is to try to make them understand their specific situation so that the outside noise is not affecting them, right? So that's kind of what I think is the most important part. And obviously people are wondering, is it a good time to buy? Is it a good time to invest? And I think that the matter or the answer is that it's the best time if you can, right? So if you can afford that, if you can, deal with the monthly payments and what comes with that, whether it's a rental, et cetera, as long as you can, then that's when you should do it.
Okay. So is that what you're hearing from your clients right now? Like what are you hearing right now?
Well, I think everybody's no one understands what to do. Everybody's trying to, latch onto the Bank of Canada announcements, but a lot of people don't realize the Bank of Canada announcements only affect variable rate holders. So it doesn't affect fixed rates. Fixed rates are dictated from the bond market. So even that simple piece of information, a lot of people don't understand and are not really aware of, not everybody. So I think it's just, again, clarifying things for people, making people understand why we're suggesting certain products, maybe why we're suggesting a lender, et cetera. Right. So when we can do that and explain all those things to them and why, then they have their loyalty and trust in you because they understand like what it is exactly you're doing for them or providing them with in terms of options.
Yeah, so you talked about that, right? The difference between fixed and variable, right? And you said people need to be educated. So that's why this platform exists. So if you don't mind, break that down to us. Talk about the variable, talk about the fixed. How are they different? How do they move?
Yep. So variable moves based on the Bank of Canada announcements. So that announcement always dictates what prime will be. And anybody who wants a variable rate mortgage, they always get prime and then plus or minus a discount, right? So there's two types of variable products. One is adjustable, where if prime goes up or down, your payment will go up or down. And then there is just variable, where your payment stays the same, but the amount that goes to principal and interest will be adjusted accordingly as prime goes up and down. And then fixed rates, they basically increase or decrease from the bond market. So depending on the bond market, if it goes up or is going trending upwards, the fixed rates will go up, trending downwards, fixed rates will go down. So they both go increase and decrease based on two very different things. A lot of people think that, when you hear that decrease, that it's all lumped together, but it's not, right? It's specific to, depending on it's the bond market or, the Bank of Canada announcement. And then right now, so there's always, it's kind of a hamster wheel. Things go up and down. Which one is better is always changing. Sometimes the fixed rates are more favorable, sometimes the variable. So obviously in the last couple of years, variable was the favorable option until it's changed and fixed became lower. So still currently fixed rates are much lower, but the gap between the two is slowly getting closer together to, with all these decreases that are happening. And really, I think it's still good to explain to people why variable could be a benefit and why fixed. And then as long as you educate them with what comes with each one, they can determine which one they want, right? Because you have to be a little more risk tolerant to be in a variable rate product. Some people don't want any changes. They want to just know what their payment is and that's it. And that's where we decide, hey, fixed rate's probably better for you, et cetera, like in that situation. And really too, there's still a good chunk between the two, and fixed rates have been coming down lately. I mean, daily, really. So, that still is much more favorable. And even terms, I feel like a lot of people are trying to do 2 years, 3 years, because they think that, once they hear all this information that rates are going to go down more and more and more. Well, who's saying that, right? We don't know, and we have no crystal ball. So what I try to say to people is just, here's where we are. This is the best rate that you can get with the best terms. Don't try to plan the market or time the market, because we just can't, right? They could forecast multiple rate decreases, for a year, but one little thing can change inflation, and that could change that whole trajectory. So it's, instead of doing that, let's see what the best option and terms are that we can get today. And then if it gets to a point, by year 3, year 4 in your term, if it's low enough where it makes sense to break, pay a penalty, and possibly save that penalty with a lower rate, well, then we can figure that out at that point. But to try and foresee what's going to happen in the next few years, it's just way too difficult to do that.
Yeah, for sure. So you like right now, I know you deal with like homeowners, home buyers, but then you also deal with seasoned investors, right? And we have investors on the line as well right now, right? So from that perspective, like, how are things going right now? Like, are investors looking at some properties right now? Because I know with people who are purchasing on my end in terms of real estate sales, I know there is some hesitation in the single family, right? But what I have noticed is for multifamily, a lot of investors are kind of a little more active. Is that what you're seeing? Like, what are you seeing from your side?
Yeah, I mean, multifamily has become something quite big in the last couple of years that I've noticed. It just seems to be something that, anyone can really invest in. There's multiple investors in that type of a transaction, or even duplexes, triplexes. Like, there's ways to cash flow or to break even, at least, right? We always have to make sure that what the investment property that they're purchasing is going to align with them and their finances. So, if it's not cash flowing, well, how much of a deficit is there? Is that something that they can carry comfortably? There's all these different questions that we sort of like go through, and different examples to kind of figure out, okay, what makes the most sense. And then obviously the real estate agent has to be involved too, because they're helping us find these properties as well, right? So, maybe you don't want a town to rent out, but maybe, a bungalow that has a basement and an upper level. I saw a place in Aurelia that it was a triplex, that's cash flowing like $700-800 a month. So it's just a matter of like finding the right investment property in the space that we're in today, because rates will change. They go up and down like all the time, right? So your purchase price is what's most important, truly, because that's never going to change. So focusing more on that, and obviously being, able to carry what comes with that monthly, or have, the bulk of that covered by the rental tenants, is important as well. So, you really got to sit with your investor and understand what their criteria and what it is that they can comfortably afford and invest in. And then from there, we do our job to sort of like explain a bunch of different examples and what the mortgage rates look like and so forth.
Okay, and thank you for that. And then what about with financing, right? From your end on a mortgage side, from financing, like is it the same process that you're dealing with the investors that are looking for more larger funding? Like what's the process that you're working with that?
I mean, it's pretty similar. The good thing is that we have multiple lenders under our belt, right? We have, traditional A lenders, B lenders, and then we have private lenders. So, obviously, they're what they're looking for and what they're comfortable carrying is one thing, but then also, credit and, what type of a property is it? Because that's important as well. What type of a lender do they need, right? So from that initial assessment, like I said, knowledge is power here. We understand where they stand and what options they have available to them before they even go into looking for properties. And if that's not something that's they're comfortable with, well, then we determine a plan to get to where they need to be. And if they are comfortable with it, whatever that looks like, then, we start the process. So again, I'm with one of the biggest DLC brokerage franchises in Canada, and with that comes a lot of promotional rates because we bring a lot of volume to these lenders. So with that respect to that, we're able to give a little bit more to a client in terms of a payment being a little bit lower because we have these, better rates. And obviously the fact that we have a multitude of lenders.
Okay, okay. Are you able to like kind of give us an example of what's going on right now? Can you show us something, or can you tell us at least what the rates are looking like right now,
Yeah.
and in terms of payment wise, what is expected that way as well?
Yeah, so rates range on the fixed side anywhere from, I would say, 4.3 to, let's say, 504, even a little lower than that. That's kind of the range. And that range is a little large because this is people who are purchasing with, less than 20% down. This is somebody purchasing with 20% down on a 25-year amortization. And then this is somebody purchasing with 20% down and a 30-year am. So depending on where you land in these categories will determine what rate you are able to get. Rental rates are a teeny bit higher, but nothing, astronomical. It's incremental in the payment. And then again, in terms, so like that alone, that range of rate, like we're fairly where we need to be. Like that's not a bad spot. Our numbers are still historically low in terms of where we land in rates. And they're probably going to go a little bit lower. I say our sweet spot and where we're probably going to end up is somewhere between 3.5 to 4.5, like somewhere in that. And that's true where we need to be. Like we should had no business being in the ones. And that I feel like really people didn't realize that this is a temporary thing, that this is something that is advantageous for us, but that we need to really watch our spending and watch how much we're borrowing because it was so cheap to borrow. But now you have people who have this astronomical amount of consumer debt and renewals are coming up like crazy. And now rates are higher and the debt's higher and mortgage payments are higher. So now we have to figure out, okay, hey, like you have options. Let's see what we can do to sort of like help you out, right? So, like I said, again, educating people in understanding that we are in a good spot with rates, that this is not, we're not in some crazy space. If you look historically, like again, we're still historically very low. So when you start to show those things to people and explain that to people, then they start to understand, okay, like, all right, like we're not so bad. Like I do have an opportunity here. What can I do?
Mm-hmm. Yeah, for sure. No, thank you for going so in detail with that. Right. And so now when you're showing them these options, because you said right now people are a little over above and over themselves right now. Like what's happening with that? Like, are you giving them alternative options for them to like let's say right now, the mortgage thing is high or like, right now they're not able to kind of like do what they say the mortgage situation they have, like are there better situations for people right now, like are there new like rates and stuff that they could get into that's going to kind of help them float this whole wave that's going on?
Yeah, and I mean, every situation is obviously different because there's a few things that we have to factor into doing an assessment for somebody and trying to get them in a better option. So, for example, I've had a few renewals where they've had some debt. Their amortization was below 25 years. So we're able to manipulate their amortization, consolidate some debts, and keep the payments kind of around where they are currently, which is what, or make them lower, right? Depending. So there is a lot of options out there for people. There's obviously some instances where, maybe we have to move to subprime lending because we needed extended ratios. Like that's the thing, is like everybody's situation is so unique and so different that people tend to be afraid to talk to a mortgage broker because they think that once they make that conversation that they have to do something, and that's not the case, right? The point of speaking to us is to understand what your options are and where you are today, and from that you can determine, okay, I'm ready to go through with this. Maybe I want to renew with you, maybe I want to refinance, maybe I want to make that purchase, or maybe I don't, but that's fine. We're not here to pressure people. We're here to make people understand what their options are. I think that's the most important part because, there's so many of us, there's so many realtors, so many mortgage brokers, so much information, especially online. Every person you follow, everything you see out there is always about rates and real estate, right? So you need to set yourself apart and really make people understand you are an educator, you're here to help people. And when they get that feeling and understand like who you are even as a person individually separate from your job, I think it makes it a lot easier for people to actually trust you.
Wow. No, that's real. I like how you said the part where, yeah, like you're here to, they don't have to be ready to buy a house in order to sit with you, right? It's
Yeah.
kind of like they just sit with you to find out their situation, their present situation, right?
Yeah, and a lot of people don't know, right? They think it's years away that they can purchase, or they don't even understand, hey, I don't know if I should just sign my renewal with my current lender because I don't know that I have any other options. Well, you do, right? And if you don't, a good mortgage broker will tell you, sign that paper. It's actually better than what I can offer you, right? Or, hey, I can offer you better, and here's what it is, right? So that's how you learn to build integrity. And when you are honest with people like that and you do what's best for them, you get more referrals because even if you didn't get that deal, you will get somebody else because they will appreciate your honesty.
Yeah, exactly, exactly. No, that's real. That's real. So right now, because yeah, we're gonna get into the session, how's the real estate market? So of course I want you to stay and expand on there, right? But just from your perspective overall, because like you're a mortgage broker, you'll be doing it for years. Like, what are some final words that you could like kind of share to the people right now? Give them insight on, for this current scenario that we're in right now, right? And not only the scenario, but also, when it's time to buy, because to me now's the time to buy. I don't know from your perspective, but just wanted to hear from you to what you have to say.
Yeah, I honestly think that you're right. I think that one, it's time to buy when you're able to, one. And two, right now there are deals to be had and rates are coming down. And what I think is going to happen, which is such a slippery slope with these rates going down, is that the minute rates go down and everybody who's been sitting on the sidelines starts to jump into the market, what happens? Prices go up, and then we might even end up being in the same slippery slope that we were in before. So before that happens, get out there, because just get assessed, know what you can do, and purchase within your means, or do what you want to do within your means. You don't have to buy your forever home first. You don't have to buy your first investment property, in the biggest best spot. Like, just figure out where you can land in the market, and from there you grow. The minute you're in the market, it is so much easier to continue to grow in the market than it is to get into the market. And prices are always going up, prices are always appreciating. Real estate is such a good investment. You get so much more return for your dollar too, and it's better even for us who don't have pensions and whatnot. It's better for us for retirement. Like, investing in properties is what's going to, in long term, give you that wealth. So I think that that's what I tell my kids too. Like, stay home, 18, buy with your brother, invest, live at home rent free, create that down payment, go to the next one. Like, these are the things that we need to start to teach people. But in regards to purchasing now, I think this is where people are going to be able to buy at a better price. And again, rates will evolve and change always. So buy now, because the minute those rates start to go down further, I'm telling you, it's going to increase purchase price.
Okay, that's a perfect way for us to really segue into this session, because we want to get into, how is the real estate market, right? Because we just talked about that, and I want anyone to open up your mics as well, or even type in the question box. We have from people registering, we have mortgage brokers, we have realtors, we have homeowners, we have investors, and we also have, of course, our speakers. We're going to be speaking, but the floor is yours as well, because during this discussion, we kind of want to get a general perspective on how's the real estate market, right? Chloe warmed us up, and she was telling us, from her perspective and what she's seeing, and what's going on with the clients from her end. Is there anyone here that is a homeowner that maybe you are up for renewal or anything like that, and maybe you have certain questions, something to prep for before you actually go on? And I want everyone to actually participate, in this session, because last month we had a session, was a great session, and then this month so much new news has happened, right? We have
I can actually relate to that. I have a home and my one of my mortgages is up for renewal. What would you recommend in terms?
Is this for me?
Yeah, it's for you.
Yep. So what I would do is it soon?
Yeah, it's next month.
Okay,
So
so
I'm with the bank. I'm with CIBC. He wants me to automatically renew. What would you recommend?
I think that you should, whether it's myself or somebody else, definitely reach out and see what they can offer you, because you already know what you're going to be offered, and share that information to the broker, because we can use that as leverage too to try and get you a better rate. So I think that you shouldn't have to have loyalty to any lender. If you're up for renewal, it costs nothing to move. Just try to always get the least amount of interest in the life of the mortgage. So get assessed, see what other options are out there for you. You might not even know, like a lot of the banks, and don't get me wrong, we use a lot of like the big banks too, but I only use them for certain things, because they're not, we're brokers are better. They have better customer service. They're around for you all the time. We don't get paid unless we have a client and a deal funded for you. So we get paid by the lenders. There's no fees to you, unless it's like a private deal. So we're going to do our best to put you in the best situation possible. So we're working for you. Your best interest is our best interest, right? So get assessed and see. And like I said before, a good mortgage broker will tell you, hey, you know what? We can't do better than that. Stay there, sign it, be good. Or like I said, I can do better. Here it is. This is what I can do. And then if you're comfortable, you proceed that way, right? Because we're in this all the time watching it. Well, a good mortgage broker is not trying to do anything, wrong for you. We want to get you a better situation, a better term, a better rate, a better everything, because it's not only about the rate, it's about your situation, your goals, and what you want to achieve going forward.
Okay, awesome. I have a meeting on Tuesday with the bank and then I'm going to call you after and we'll meet.
Absolutely.
Thank you.
No
Yeah,
problem.
that's what I'm talking about. That's what this session's for, for us to connect with each other, for us to build with each other. And Natasha, she's gonna be speaking later as well. A real estate investor with multiple properties, and like this is who we really want to connect with. Natasha, if you don't mind, I know you have your thing with the bank, but this segment is, how is the real estate market from your perspective and your eyes right now? How are you seeing it? I guess she took the comment and just ran with it. She's probably at the bank right now. She's like,
Yeah,
well, yeah.
so maybe you should- I'm going to connect with you directly, Chloe.
Pardon? You were cutting out. Hello? All right, no
Sorry, I was
worries.
just saying, yeah, that was such useful information. Can you hear me?
Yeah, we can hear you now. We can hear you now.
Okay, perfect. I'm going to connect with you directly and we'll go from there. But
All
thank
right.
you. That was your information you shared was valuable.
Thank you. I appreciate that.
All right, all right, all right. So I want to go to this screen right here, while we're talking about how's the real estate market, right? Because, according to the details that we're seeing in the market stats, right? We're looking, at the, general area, in a GT around surrounding GTA and in GTA, right? And from what we're seeing the sales, have actually dropped from in it's 7244, so 7,244 decline, sorry, 4.1 decline month to month in sales, right? New listings, we have a decrease in terms of new listings. Last month we were at an increase. Last month there was about like 22,000 listings on the market. So now looks like there's less listings. So for me, that looks like more sales are happening, even though the sales have declined. But it looks like, I guess, list to sales ratio, right? The average price, it's saying 976, right? And which has declined in terms of price. So the prices of properties have actually decreased, right? The dollar volume has also decreased in terms of overall purchasing power and what has actually been sold. And then leasing amount, the lease has increased, right? There's been more properties being leased, within the past month, right? And also we're seeing the prices of leases are decreasing, right? So there's a lot going on in these stats. And, if we take a look closer into the GTA core area, we see also, although the numbers are less, but in terms of the increases and decreases, are pretty similar, right? So the sales have dropped 5.3%, right? We see new listings have kind of been even as to last month, right? In the GTA area, right? Average price has decreased 0.8%, right? So just as Chloe was talking about, right now is a time to go out and look and buy, because we're seeing the average price of properties decreasing, right? The dollar volume has gone down as well. A lot more leased properties. We see a 20% increase in leased properties, right? And the amount of the bedrooms have gone down, right? So from you guys seeing this data over here, does anyone want to actually expand on what they're seeing over here? Chloe, you're here. I see Korey Miller, you're here as well. We have people here that are well versed. Or our Shaq Hall is also here. Our next speaker. I want you guys to talk about this. Like, with the real estate market, we have people that are on here. That are homeowners, buyers, investors. And they want little intel as well. They want to know, like, us to dissect these numbers to them. What are you seeing? Like, what are you seeing from even your perspective? From even the stats aside. Oh,
I have a question.
yes, go ahead.
So my question is, why do you think, like, the interest rates have went down a little bit? Why do you think there's a decrease in sales in September, even though the market's going down? And I guess the other question is, do you think it's like the time of the season? Like, does that have anything to do with it? Like, can you look at like past Septembers and determine like what it was compared to this September? Is it the season where people are going back to school type of thing, and maybe people are not selling at this moment? Is October looking like a better month forecast wise?
Yeah, so from a realtor perspective, what I'm seeing is the reason why I think the sales are actually decreasing is because a lot of people and on the listing side need to get accustomed to the new prices. A lot of people, any listing agreement that I'm into, the price is here, but the seller wants here, right? They're looking for something a lot higher, and hey. If that's where they're at, as a listing agent, I can't really argue with. I could show them the data. I could say this is where it's selling, but at the end of the day, it's their house, right? So what we're finding on the market is, houses are actually on market for a lot longer, right? And because we have to bring the prices to where they really are, the market is actually speaking. Although, yes, there is a price that everybody wants, and some people are getting their price. I'm not saying some people are definitely getting their price, but a lot of homes are not. Something that was selling for about 1.5, before like a year and a half ago, now is selling for like 1.3, right? Or even 1.2, right? Depending on how long you're willing to wait for, you to get the offer that you're looking for. That's what I'm seeing. Anyone else seeing anything different? Guys, we want this session to be interactive. We want everyone to give their input. and see it from your perspective, because that's how we're gonna get all the information out there, right? This is so Shaq, you're here, you're joining us. What are you seeing? Kory, Kory Miller just asked a great question. We have Kory MacKinnon on here as well. What are you seeing? Okay, yeah, we got your hand up. All right, Kory, thank you.
Yeah, I'm not going to speak too much on the realtor side, but I do a lot of re-rentals. I got a property management company, and I think you'll find that with rentals, they're just it's a smaller boat, right? And people are going to pivot and adapt. If they're not getting the rents, they don't want to be bleeding too long, right? They're going to drop that price. Rents are coming down, just like as inflation numbers settle, so will rent numbers settle too. And people don't want to have those vacancies for too long, right? So we're definitely seeing rents, I guess, coming back to somewhat normal. They were definitely inflated, and you can only inflate a rent so high before it becomes unaffordable. Definitely, people are getting roommates more and more now, so you got to be mindful of how many people are living in your units, for sure. So, but I think for rentals, we just had one of the best rental months ever, which is typically your August, September months are going to be your best rental months.
Okay. So yeah, thanks, Kory, because that lines up with the stats. What you were saying there, because we see that the amount of rentals have increased, but like what Kory just shared with us, and if I go back here, right, what Kory just shared with us, the prices have to come down, right? He said they're inflated, right? So so we're seeing that here, the prices are coming down on the rentals, but the amount of rentals is becoming more. Kory, that's what you're seeing, right? Yeah, okay, give us the thumbs up. Right. So guys, pay attention to this data, even if you're planning to get property, just have that understanding, see what the numbers are, know that the numbers are dropping a bit. Know when when you get in the situation, you want to get in on a buy, profitable. Kory talks about that, right? But you want to analyze the market and see these trends that are going on, so that when you make your next decision, your next investment play, then you know exactly what to do. So yeah, thank you. Anyone else have anything to add for the session? Guys, what about the 30-year amortization? What's going on with that? Also, we have these new there's more announcements. Actually, you know what? We could get into our next speaker, because on live he did say that he wanted to go deeper into that. So it is a perfect segue to introduce our next speaker that's joining us right now. Shaq, we see you. Thank you for being here with us, brother.
I appreciate it. Thanks for having me. Well, yeah, definitely 30-year amortization. The federal government had put some rules into place that's going to be effective as of December 15th. So it's towards the end of the year, where you're allowed to do 30-year amortization, purchase up to $1.5 million under insured mortgage, which, in my opinion, it's a game changer, but it's also a double-edged sword, because now our economy is getting more into debt. But debt leverage properly, as people may know, it could be done really, really well, where you can actually build some wealth for yourself. So we all know, like, the average house, I think you're showing the stats, is just around, in Canada, just around that $1 million mark. So pushing it to 1.5 on insured mortgages is not going to help a lot of people put down less, get into the market, and more importantly, leverage strategies like house hacking. Right. So house hacking is something I want to touch on very, very quickly, share my story, how I got involved in real estate. And it was almost a decade ago. It was about 8 years ago, when I was in school, in university, and I was able to save some money up, and I was able to put a down payment of, I think at the time, was like $7,000 down on a property that I purchased for about $150,000 in Windsor. So obviously those prices are not the exact same as it is now, but I was able to get involved into my first property, live in one room, and rent out to the rest to my friends. All right. So I had 4-bedroom, was living in one. My mortgage and all-in costs were about $1,000 a month. And I was renting out each room for about $400. So 2 rooms are basically covering my mortgage and a little bit of maintenance and property tax. But that 3rd room allowed me to cash flow. In this market, with strategies like house hacking and with these new rules that are coming into place, it's now going to allow people to maybe qualify for maybe a fourplex, right? Under that 5 unit mark. So it is still residential. So qualifying for a fourplex, living in 1 unit and potentially renting out 3 other units, right? So house hacking is a strategy where I've been helping a lot of people. Recently, clients who are even converting their house into their single family house into a duplex and maybe adding an additional ADU, pulling out some equity from another property. But this is a way where people can get involved, invest for cash flow, and really see them cut down on that mortgage amount. But what's really people need to really pay attention to with these new rules is to pay attention to the amount that's actually going towards your principal versus your interest more than anything. Because with having an insured mortgage, for those that are not familiar with it, they actually add on a premium from the mortgage insurance companies such as CMHC, Canada Guarantee, or Sagan, right? These companies add that insurance premium on that mortgage, and it is amortized for 30 years, which is great, which helps lower the payments, but ultimately that's more debt that you're carrying on for a longer period of time. So now more than ever, it's not only getting the debt and get qualifying and helping more people qualify because we have more houses than we have people, but it's more importantly figuring out ways where you can now generate income for yourself. I've been helping clients as well too, under the property management company that I have as well, with Airbnbs, helping people, convert their basement into short-term rentals or renting out the top and then moving down to the basement. So those are strategies that have been helping as well too. And now more than ever, I'm seeing lenders now willing to take that income and consider it as income to qualify for a mortgage as well too. As long as you can provide some history and some paper trail, short-term rentals are now a strategy that people can leverage and use it to actually purchase properties for potential rent or potential revenue that's coming in, and also existing income that's coming in from Airbnbs as well. So those are some of the things I wanted to touch on really, really quick. And Richard or anybody in the audience, if they have any questions on that, feel free to can answer any and go into more detail.
Okay, yeah, man, for sure. Do you need a screen share, or you're just gonna talk to us
Screen
on here?
share. To be honest with you, I didn't get a chance to prepare
No,
anything,
that's
so I
cool.
don't
No,
have
no,
no
I'm just
slides or
asking
anything.
what.
But if anybody like, I can pull up some stuff of the new rules of what that means, how that looks from the government of Canada. Rates are going down, which is really, really good. I'm somebody who's on the charts. I have a trading background, so I'm monitoring anybody that wants to know where this economy is going. It's to study the bond markets. The bond markets have a correlation with interest rates in Canada, and more importantly, the fixed rates. So we're starting to see that drop as well too. So fixed rates are starting to drop. So I know everybody's excited about the Bank Canada rate announcement. Some people have it circled in their calendar, which is great. It more happens to affect more people who are in the variable mortgage, because that affects prime rates. But the bond yield markets can now it shows you more of longer term financing, whether it be a 3 or 5 year mortgages, where they're starting to go, and we're starting to see it drop a bit as well. So, do you
Okay.
want me to show some charts? Like,
Well, we have a question here. We have Cameron
Okay.
that put up their hand. Hey, Cameron, thanks for joining us. Thank you for your participation. Go ahead.
Thank you, thank you. So I have a question for Shaq. So I just wanted to ask you about the bond market. I wanted to learn more about it. Are you interested in teaching someone about it? And
All right, perfect. If Richard can allow me to share my screen, I'll
yeah,
share
yeah,
I'll
yeah, yeah.
share exactly what I look at least on a week-to-week basis, um, just to see kind of what's happening,
Yeah,
right?
go ahead, brother.
Let me see if it'll work here. Perfect. Thank you, Richard. Let me just pull it up so I can share it.
So while you're doing that, I want to see some of the comments here. Corey said, brokers definitely have access to many more lending options than the big five banks, right? Chloe, everyone, Chloe, you see her Instagram there. She posts her Instagram. Make sure that you connect with her. Yes, Korey frequency is a real thing. All right, good stuff. Yeah. So while he's pulling that up, I want everyone to take a listen to what he was talking. He was talking about house hacking, right? And Shaq, if like while you're searching that up, if you don't mind expanding on the house hacking, I know you said you personally did it, right? But if people are looking at house hack right now, what are you suggesting that they get involved with?
The first step is seeing what you can qualify for. So visit a mortgage broker, someone like myself, or go to the bank and see how much you can qualify for. Mortgage brokers will obviously give you better options, and seeing how much you can qualify for, right? Seeing exactly how much money that you are bringing in can qualify for you based on a mortgage and how much you can comfortably afford and purchase during these times. Like, we're fortunate enough to be in Canada. Like, there is something called the stress test that, we've been prepared for times like this. It's been a tough, and if anybody wants to lie about it, it's been a tough, like, year to 2 years in the markets for any investor. It's you want to see what you can comfortably afford. I had a couple of conversations with a few developers, and they're telling me some of the stuff that they're going through as well too, and how so many of them went through bankruptcy for carrying these high mortgages or high land loans. So it is tough, but make sure you obviously can comfortably afford whatever you're looking to purchase, especially as you scale your portfolio more than anything. And sometimes it makes sense to even sell and revisit your portfolio and have somebody like a financial advisor or a mortgage broker review your portfolio to see what makes sense. So that's the first step when it comes to house hacking. Learn what you can afford. And then the second part is build your power team. Get a realtor that specializes in either, bigger properties that you can either, do what I did in terms of like living in one room and renting out the rest. If you're not comfortable, doing room rentals, which is most people aren't, look at getting multifamily under 5 units. That's still classified as residential. Once you hit that 5 unit or more, it's now a little bit more complicated, but it goes on the commercial side. But on the commercial side, the benefit of the commercial side is they're now going to look at the asset itself and how much it's producing via a cap rates. So how much the actual property is producing versus the expenses on the property. And it has to service itself by a number of like 1.2 on average for most lenders. So learning what you can qualify. So two steps: learning what you can qualify for. Second step is get a realtor that can help you look for these properties. And then the third step, a realtor that knows what they're doing, especially when it comes to finding multifamilies, duplexes, or bigger houses that you can potentially room rental. And then I would say the third step as well too is start to do your due diligence. There's a ton of different apps online that can give you estimated rent in these specific areas, potential rent revenue that you can use. And then on the financing side as well too, that mortgage specialist or mortgage broker or person at the bank should be able to get a market rent analysis to actually use some of that income. Lenders typically like to use anywhere 50 to 80%. Some lenders will use 100% of rental income, and then use that income to help you even qualify for more of a mortgage or a bigger purchase price. So I would say that's like the 3-step process. One is learn, pre-qualify. 2, get a realtor and build your power team. And 3 is running the numbers on how much you would actually make or how much is going to be subsidizing your mortgage. Because not everything will be cash flow positive, but it is great in this time, in this economic time, to have some type of income coming in to subsidize some of the debt that you're going to accumulate. Yeah, I'm trying to share my screen, but it's just not allowing me to. Hold on. I think it's one of the settings here. But if not, I will just drop a link and maybe somebody else can share it. Or Trudy can share it and drop links in the chat box of a couple of sites that I look at to see some of these bond charts.
Drop it in there, and then
I'll drop in the chat for you guys. And I'll happily take any other questions. But hopefully that clarified. Whoops. Hopefully that clarified the process of, how to house hack or how to get involved in that strategy. Okay, copy. I told Richard I don't do much webinars, so
Yes, yeah.
you guys gotta bear, you
He is
guys
a
gotta bear with
co-host.
me. I, 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 I
So
like to
if
do
you
my
look at the bottom,
impression.
it says share. Hey, this
I
is the
got you.
technology. It's just like AI. We
Like,
gotta adapt now. We
I,
gotta
I
adapt
was
to the new
I was I
technology
was the I
nowadays.
was the king of Zoom when COVID hit, but since things are opening up, I'm definitely more
You're
in person.
outside guy.
Yeah,
You're
yeah,
outside.
outside.
That's why we do this on Mondays. We do this on a Monday so you can still go outside during the week. So Mylene, if you don't mind sharing that on your screen. Yeah. So we'll pull that up, right? And yeah. So in regards to like your session, you're talking about like the house hacking, multifamily investments, and then you were talking about up to four doors, right? And then obviously five or more. It's based on the income, right? So
Yeah.
now when people are coming to invest in these properties, right? Like, what are you looking for on the paper? Like, what are the key things that you're looking for? Say, okay, yep, I know this person's good to go.
Yeah, 100%. So with any pre-qualification, I always like to tell people and teach people everybody has their own process, but to simplify it for everybody on the call who are investors, three things. You're looking at credit, they're looking at collateral, which is your down payment, how much you're looking to put down. And then the other C is your capital, how much money you're actually bringing in. So when it comes to multifamily, on the residential side, they're going to look at like under 4 units, they're going to look at your down payment, of course. They're also going to look at your credit. They're also going to look at your personal information. And your income that you're bringing in, whether it be your specific income that you're bringing in from your 9 to 5, your job, your T4, or your corporation or sole proprietorship, or your rental properties. If you start to have a portfolio as well too, they're going to want to see your income. Um, then they're going to look at your credit. For most top lenders, if you're looking at prime lenders, you're looking at 680 or above. If it's lower than that, there's a ton of alternative lenders that will help you out. Some people, credit is completely shot. You can always look at private lending, and that's not an evil thing or completely bad alternative as well too. I personally held multiple private mortgages before. And it's for a specific strategy because these are usually short term. So you want to get in, do what you got to do to kind of refinance and get out of it and then put it into something more long term. So those are the kind of the three C's that they look at, is credit, your capital that you bring in, and your collateral, your down payment. When it comes to bigger multifamily, over 4 units, now looking at 5 units. Now, one of the things that we're looking for at checkpoints, as Richard was asking, like what do lenders or what the brokers kind of ask for, is they want to see the rent roll, they want to see expenses, and usually the realtor should be able to provide that because the seller, they're listing on MLS, they should have all that information ready to go. But they're going to share their rent roll, what is that property currently producing. They're going to provide these lease agreements as well too, what existing lease agreements they have involved, or is it vacant? If it's vacant, we're going to need an appraisal to show market rent analysis, right? And when it comes to bigger multifamily, these appraisals are a little bit more pricier. They're north of sometimes $2,000 or more for these bigger multifamily buildings that you're looking for, right? And that report kind of gives the lender and the broker everything they need to know to position it properly to get the financing in order. So yeah, that's it. To make it very quick and short and simple. On the personal side, if it's 4 units or more, you're looking at your personal income, you're looking at your down payment, and then you're looking at your capital that you bring in. On the bigger multifamily side, it's more on the asset itself, and they're going to be looking at cap rates, right? They're going to be looking at NOI. What does the property actually produce in income minus the expenses with a variable, with a variance of a vacancy, some capital expenditures, and essentially, we take care of most of the numbers, so you don't really have to know it. But there's a ton of different spreadsheets that you can use as an investor online that can kind of help you calculate your cap rates from your NOIs and all your expenses and put it through a spreadsheet and kind of underwrite it yourself. But essentially, lenders are going to want to see it, the debt that you're going to get for this mortgage or for this multifamily cover itself by 1.2%.
Okay.
Well, perfect. I can see the screen is being shared now. Thank you. I was having some difficulties on my settings to share my screen. So yeah, these are some of the stuff that I look at. This is actually from the Bank of Canada's website. The other link I sent was from a third-party Market Watch website where you can see literally the rates, right? So this is right now showing from January, I believe, 2023 to 2024. And as you guys can see, we kind of seen the height of it at is the red, can you see the red
Yeah,
one?
yeah, it's showing
Perfect.
January 2019 and
Perfect.
up until January 2024.
Yeah, so 2019 is it showing?
Yeah, from starting 2019
Okay,
to
perfect. Can you
2024.
scroll up a bit? Scroll up, scroll down, sorry, scroll down. Perfect. So these are the bond. And as you can see on the bottom is a legend here, and it shows you the real return on the bonds and as well as the average bond and from long-term period of 10 years. So on the bottom too, it also has 1 to 3 years, 3 to 5 years, 5 to 10 years. And then you can historically see how these rates affect interest rates, especially for the fixed interest rates. So if you're looking more on the zoom in approach, if you go back to the chart, you're going to see it starting to drop. You're seeing a peak. If you can go to the peak there. Yeah. Yeah, perfect. So you're seeing the peak there, and that's roughly in September last year around this time, which is crazy, 2023. And as you're seeing now, it's kind of slowly dropping, right? It's not at completely where it was before in 2021, but it's starting to slowly drop. With that and inflation starting to drop is why we're starting to see interest rate cuts, right? And especially in here in Canada, we follow a lot of the news in the States. So the states just they do less rate cuts, but they just dropped a half a point, which is big. We're typically we're projected, and all the economists are saying we're expected to see another cut as well too happening in October, and it's rightly because of these charts that you're seeing here. To go into depth on how to read these charts, especially on the one and the other one, and another chart that I use as well too, to actually read the candlesticks. That's like another call for another time. But essentially, you guys can go on this website. A lot of information on this. It's similar to the stats that I see when I first jumped on, where Richard was showing. You can also go on Korea, which has all the real estate stats in Canada as well too, that shows you these different trends. So, this call is for cash flow for investing in cash flow. So a lot of investors are probably on this call. These are the resources on your fingertips that you can leverage. And this is another great website as well too that you can leverage. So Market Watch that shows the rates. So right now, bond rates, I'm assuming this is a 5-year bond year rate chart, right? Yeah, perfect. It's 2.7. So prior to that, and this is just showing daily. So where you see advanced charts, you can actually switch at different um time frames. So it says 1D, there's like an arrow there, arrow pointing down. Yeah, you can actually switch that as well too. Let's go to, I don't know, 3 months. And now it's going to show us a longer period of time once it refreshes, right? And as we can see in the last 3 months, it's just been dropping. This is why we're seeing the rate drops. And you can go even further. Right? We can
For
see
one
6
year.
months ago. All right. And then you can go even further and go to year to date.
Oh, year to date. Okay.
Or 1 year. You're starting to see it. Like everything moves in cycles.
Mm-hmm.
So we're at a period right now where, the bond yield market is dropping significantly, right? Slowly but surely. It's not dropping as fast as everybody wanted to see. Because obviously when we seen these rate hikes, it was going up so fast, but it's starting to drop significantly. So, this is why these analysts are saying we are going to be getting some rate drops towards the end of the year, and into next year as well too.
Okay, that's that. Thank you for that. Thank you for that, guys. If there's any question, anytime, please post it and share it. I see Korey said many times 3 to 6K, depending on the
Listen,
size
these
of.
appraisals are very expensive, and unfortunately, sometimes you don't even get these reports. Um, I think the most I've seen was about 5K for a commercial appraisal report. So yeah, it is become a little bit pricey, but it's a price you're willing to pay.
Mhm.
And these buildings are going to be generating a lot of money for you, right? And it's even even better if you can get a property and get the pinnacle of mortgage and financing, which some people know about, which is the MLI Select program, which is at 95% down, 55 year amortization product. Very difficult because they qualify you in three categories of affordability, accessibility, and energy efficiency, I believe. It's a point system, but that's the pinnacle of financing through CMHC on the 5 units or more commercial side.
Okay, so you were talking about the bond though, because from my understanding, the bonds are correlated to fixed rates, and then after the variables is different, right? But we're
Yeah, so
seeing them both dropping right now. So there's no correlation to that.
Yeah, so the bonds are more correlated to the fixed rates. So the bonds, so the Bank of Canada has their rate, right? Their overnight rate, and that is correlated to variable rates. And then banks would have, let's say, 2% higher. So if I go back to that first website, I believe on there you can find the Bank of Canada's rates or overnight rate, and I think it's like 4% right now, 4.5. So let's see, which page is it on? It may be on, or search it up. There's a search bar right there on the top right. And just put Bank of Canada rate. And you should see like the benchmark rate. That's like what essentially it costs the bank to borrow money. Or you just click the first link. Because usually with the announcement, they'll talk about the Bank of Canada's rate. But this looks like it's from 2023. I don't think it's the right thing. Hold on. Scroll down.
It's a quarter right now.
Say it again?
It's 4.25 right now.
Yeah, so it's about 4.25 right now. So Bank Prime is usually about 1 to 2% or 2 points higher. So Bank Prime is like 6.2, if I'm not mistaken.
All right, so for the people who are on here and they're hearing you talk Bank Prime and that's why we call you the experts. You know, you have your language, but there's some people they don't understand the language. So when you say that, when you say okay, you know, the rate is this and then Prime is 6.2, like what are you referring to?
Yeah, so the Bank of Canada's rates is the overnight rates, the benchmark rate that they have, and then the banks now. This is what it costs basically the banks to borrow that money. And then the banks add their premium on there. That's what essentially was Bank Prime. Their premium is usually about 2 points higher, roughly on average. Okay. So if it's at 4.25 right now, Bank Prime for most banks, right, it is 6.2 roughly. And then that's the rate that you will see that's going to affect variable, because now variable, there's usually discounts around that. So yeah, usually discounts around Bank Prime. So you have the Bank Prime rate, let's say it's 6.2. You will get a discount of, let's just say 50 points or we don't see a whole percentage anymore, but you know, you'll see 25 points or 50 points off of that Bank Prime, and then that's your variable rate. So anytime that announcement comes out for the benchmark rate and that drops, Bank Prime usually drops as well too. So it's a correlation on that side. Now, when we're talking about bonds, a little bit more complicated, but essentially that's now affecting the fixed rates.
Okay.
So hopefully that makes sense.
Yeah, man. Thank you.
I see one thing too, actually. A lot of people don't know that the TD Prime is 15 basis points higher than every other lender. So whenever somebody goes to TD, their rate is already essentially 15 points higher than everywhere else. So a lot of people don't know that.
You got to love TD. TD is always a little bit more pricier.
Where does the IBC rates fall?
They usually follow RBC's prime rate. Like all the banks are usually have around the same prime rate. TD is probably one of the few that has a higher prime rate.
So I'm hearing right now that with the banks too, they're being competitive. I guess they're posting their rates and they're being really competitive. Is that what you guys are seeing?
Yeah. It's been like that for years, right? Banks are competitive. You know, they all this information is public. You have posted rates online, but as brokers, obviously we can see, you know, what they can do to go lower. My background comes from working directly at a bank. I used to work with TD for a couple of years as well. And for those that are coming up, because we've seen the articles, we're hearing people that have renewals coming up this year, next year, and the following year. There's always better that they can do. So if you have offers from, you find something online, or you can get an offer from another institution, you can always submit that offer to the back office and get a lower rate as well too. So yeah, they're very super competitive in terms of winning new business. New business, you're always going to get the best rates. Existing clients, unfortunately, sometimes you get a little bit of higher rate. It makes no sense to me because wouldn't they want to keep your business? But that's what it is. Banks are very, very competitive. I'm sure is it Chloe that was that add in? Yeah, I'm sure Chloe can agree as well too.
Yeah, and I was also saying too, like we can use those offers as leverage to get better rates for people. So I always encourage people to like let me know what it is you're getting instead of hiding it, because that helps us do our job better.
Exactly. So if you get that fancy letter in the mail saying your mortgage is coming up for renewal, definitely bring that to your mortgage professional, and that's going to give them leverage to help you guys all to get your even better rates, right? So, and yeah, it's competitive. It's just like Bell and Rogers, right? You have an issue with Rogers, you call up Bell, and they're for sure going to give you some promotion or some type of a better promotional plan for your phone, and maybe even a free phone. Who knows, right? Same thing with banks. They're very competitive. They love new business. And even if you want to stay and have an existing business, there's always something they can do. But always remember that, new business is always better than existing.
Yeah, for sure. That's amazing. Thank you so much. Shaq, any final words for everyone on here?
Yeah, I'll drop my Instagram on here. I know there's a lot of investors on this call. Best place to reach me. That's the most active I'm on. I'm on LinkedIn, but I'm not really active there. Most active on Instagram. In the link in my bio, I actually have a mortgage calculator that I think can help a lot of people. Just jump on there, download that app. For investors, it's always great to do your due diligence and know your numbers. It makes our job a lot easier. And then you can see exactly how much you can qualify. There's a stress test on there as well too. You can run your numbers for multifamily. You can run your numbers for any mortgage. Right now rates are about 5%. We're seeing rates at 4%. As well too. So there's on there as well too a bunch of different lenders and rates. So follow me on Instagram. It's Shaq Hall _, and then click the link in my bio and download that application where you can run your own numbers on your mortgage, and then hit me up if you have any questions when it comes to house hacking directly or purchasing multifamily. I'm happy to jump on calls to break down the numbers for you and make it work for you guys.
All right, great. We have some questions. Mateus, he said, what were those 3 steps again, please? And yes, the recordings will be shared, and we're going to be having snippets. We're going to be posting on social, from all this content. But yeah, Shaq, what were those 3 steps again?
3 steps: get pre-qualified, visit your bank, visit your mortgage specialist, and understand what you can comfortably afford in this economy. It's very, very important as we enter another phase, especially going into next year, where our world is getting into more debt. You got to make sure you can comfortably afford that debt, because debt is a double-edged sword. So make sure that you can make it into a one-edged sword where you can manage that and allow that to make you some money. So get pre-qualified. Second part is to build your power team. Get a realtor that knows what they're doing and specializes in helping people get into multifamilies or bigger properties where you can potentially house hack. And then 3 is do your due diligence, learn your numbers, understand, go online and see exactly how much is average rent in specific geographic location that you're looking to invest into for your potential rental income. There's sites like AirDNA where you can see how much potential income you can be making through Airbnb and short-term rentals. So those are the 3 steps. So pre-qualify, 2, build your power team, get a realtor that can help you find these listings, and then 3, make sure you do your due diligence and numbers.
All right. Some gems dropping nonstop. And thank you so much, Shaq Hall. We appreciate your time, and okay, we got another question. There we go. How much time do you get when you are pre-qualified?
So when you're pre-qualified, it's the difference between pre-qualified and actually getting a pre-approval. So pre-qualifying, you can get pre-qualified in under 10 minutes if you really want to, if you get all your information in and it'll just like my app automatically just produces a report. Like I get a copy of it, you get a copy of it, and it shows you what you can comfortably afford, pre-qualify. When you get a pre-approval, pre-approvals can be locked anywhere north of 90 days to 120. So that's actually locked in. And in an environment like this, it's definitely great to have a pre-approval in hand, actual commitment in hand from a lender that's saying you're pre-approved up to this amount. But we are seeing dropping in rates, right? So it's good to have it in hand so you're comfortable, but you're always going to have to go back to that mortgage agent or banker to get that rate a little bit lower, especially in this environment that we're looking at right now. So yeah, so pre-qualifying, you can do it under in less than 10 minutes, so very, very quickly. And a pre-approval, something different where you actually have a commitment in hand, and saying that a lender saying that they can potentially give you a mortgage because they're comfortable with your financial situation.
And that's typically better, right, Shaq? Like
1,000% better.
you have to provide documentation. Otherwise, it's all hypothetical because there's so many factors with that too. And as mortgage brokers, we pay attention to rates that are dropping, and we can get float downs from lenders, which means if the rates drop with them, we can get you that lower rate. So as long as you're locked into something and there's drops, we can still get you the lower.
1,000%.
Okay. So yeah, Chloe, you talk about float downs. Okay, I like that. So guys, all this information you may not have been aware of, and that's why we're having this platform. So thank you for everyone that's asking questions. As you see, you get more out of our speakers, and that's what we're looking for this platform to be. So yeah, Shaq, man, I appreciate you, for, sharing your insight, and all that. Thank you everyone for the questions. And we're gonna head on to the next segment of this session. So, before we get on to our next speaker, I really want to get into health being wealth, right? Because we could go out, we can invest for cash flow, we can make all the money we need to make, right? But if you're not healthy, right, then how are you actually functioning, right? So real quick, I want to go over health is wealth, and unicity, which is something that's expanding here in the Toronto area, right? It's in over 61 countries, right? But an understanding fact is that over 90% of the world's population is metabolically unhealthy, all right? And this is from Diabetes Canada, showing that 1 in 3 Canadians is living with diabetes or pre-diabetes, and they don't even know that they have it, right? And the main cause of this is through insulin resistance. I just got an understanding of insulin resistance about 3 months ago, but it makes complete sense, okay? And because insulin resistance is what most people have, they're having sugar spikes in their day, right? And from having insulin resistance, there's so many side effects to it, right? Skin pigmentation, overweight, diabetes, cholesterol, erectile dysfunction, brain aneurysms, dementia, right? Because the thing with insulin resistance is that your blood is not flowing through your body properly, right? So regardless of what business you're doing and how you're moving around, this is a core thing that, even within the map book, we talk about your physical health, right? And your physical being, because this temple that we have, what are we feeding it? And if you don't realize, right now, we're not being fed properly, right? These companies that are over here is about 10 companies that control all of the brands that you're seeing inside the grocery store, right? And a lot of these companies are profit driven, right? And a lot of the ingredients that they have inside of them are not good for us. Yet they have to go over because we're in mass consumption and we're not being fed properly, right? As you see in this phrase over here, it says, if your food can go bad, it's good for you. If your food can't go bad, it's not good for you, right? And a lot of people are eating food that is not good for you, but your temple, this body that we're carrying around, we have to treat it like what it is. It's precious. It's valuable. It's the most valuable thing that's in this world. To you, our body, this is what we carry with us. Once it shuts off, we shut off, right? So how are you actually treating your body, right? And, just to give a visual sense, when you have a top-end car, you're going to treat it the best. You're going to give it the best petroleum. You're going to make sure that you go through the oil changes. You're going to do everything that's required to keep it in good condition, right? But what about your body, right? Someone that doesn't treat their car good, right? And the oil, you see it turning color. But most importantly, if you look in this right image, this is called sludge, right? This is from someone not changing their oil and eventually the oil hardening and it actually seizes the engine and your car cannot run no more, right? So how are you actually feeding your body really matters. And this company, Unicity, is actually out here. And that's what you're pretty much doing. It's like you're doing an oil change for your body, right? Because our gut is actually controlling all the external things that are going on in our body. Anytime anyone has any kind of sickness or, they're taking medication, that's just the masking, right? Internally is where you really need to be thinking about your optimal health, right? And these two products, they're part of something called the Feel Great System, right? Yerba mate is a natural plant containing all vitamins and nutrients that can sustain life, right? And it's consistent with your energy flow. People are taking this product and not needing coffee because coffee gives you the crashes, right? So you see consistent throughout the day, and it promotes intermittent fasting, right? And balance is it's nourished with fibers, that our body needs because it's removed from our food, right? So the Feel Great system, it's a very simple system where you practice intermittent fasting. So after you take your meal for the day in the morning, you don't eat breakfast first thing in the morning, right? You fast, because when you fast, anything that's trying to accumulate in your body, any viruses, diseases, they all get killed off because your internal body has shut down, right? And Unimate, it's going to energize you by the nutrients that it has, right? So you take a Unimate in the morning, take a Unimate midday, and then before you have your heaviest meal, you take a balance to have your body in its proper natural state, right? And there's so many benefits to intermittent fasting. If you're a health conscious, I'm sure you already know about intermittent fasting, but this is something that is so important that every person does if they want to take care of this body that they have in this temple, right? And there's so many benefits to it. And these products are actually Health Canada approved, right? And they're in market in Toronto. And, I'm bringing your attention to it because I've been using a product for 3 months and it's changed my life. Energy levels amazing. No more brain fog. I noticed my skin getting clear. No gut issues, no bloating. I feel really good. And it's a Feel Great system. So that's pretty much, what, we're bringing to your attention. And this is short attention because this is something that gets so overlooked, but it's so important in all of our lives. So make sure you get that proper oil change. You're taking care of your body, and that's what the Feel Great system is, right? These are some transformative, results that many people are getting, in the program, because also when you're intermittent fasting, your body needs energy, right? And when your body's not feeding off the glucose and the sugar spikes for energy, then it goes and it feeds off your fat. So it's actually helping people with weight loss. And there's a high demand. Over 90% of the world's population are metabolically unhealthy, right? And with this company, we have a 1% mission where we want to reach 1% of the market, right? And 1% of the market is a large market, especially as you see Ozempic, which is really taking story. You're going to see it all over the place. But Ozempic is known as now as a weight loss drug, which was originally made for diabetes. But they have a Wegovy, which they introduced, and it's actually increasing like crazy in the market share once it got FDA approved, just because it's helping people lose weight. But what's actually inside of it is inside of our natural Feel Great system, right? So, real quick, if anyone's interested in knowing more about the Feel Great system and you want to try intermittent fasting and you want to have best optimal health, then just go to the website, betterhealthwealthhealth.org, right? Book an in-person or a Zoom call, on the website to learn more about this product and the business if you want to know more about the business as well, right? And if anyone that you're interested, send them to the site. If you see anyone with high cholesterol, diabetes, any high blood sugar levels, skin disorders, they're overweight, they feel sluggish, they have brain fog, bring this to their attention, all right? Get them on the site, Better Health Wealth, all right? So I just wanted to plug that in because, we don't pay attention to those things, but those things are really important, right? And, we want to make sure that we bring that to your attention. So we're going to get into our next speaker, which is over here, and he's been involved with multifamily, properties. I actually met him at a multifamily conference, him and his partner, Danielle Chazon. They're teaching everyone about multifamily, You know, they have amazing courses, and you know, I'm grateful for him being here with us on this platform. You know, he has a load of information. Korey, are you here with us? Oh, I see him here. Okay, okay. Okay.
Hey, everybody.
Hey, Korey, thank
Sorry,
you for
Richard, I
joining
didn't
us,
get
man.
the schedule. I guess I'm 40 minutes early now.
Yes, yes, 40 minutes early, 40 minutes early for sure. We have to improvise. You know, some people had to switch their times, and then also during the how was the real estate market session. You know, that's a session we want more professionals to come on. So, you know, if even next month, you know, or everyone that's on here, invite more people on here so we can get a bigger perspective, right? You know, and that will actually run for longer. You know, but you know, hey, you know, we have to go with what it is. We got some great feedback on there, but now we're here to get some more gems from you. Oh, actually, I see what you're saying. See, I got the Koreys mixed up. I got the Koreys mixed up. Oh, Kory Miller. We got Kory Miller that's supposed to be setting in here, Kory.
I was gonna say, I'm like, which Kory?
All right, Kory. Kory Miller. You know, let's get into it. So Kory is a marketing specialist. Kory McMillan, thank you. We are on standby. We're waiting for you as well. But Kory McMillan, you know, talk to us, man. Let us know what you do. You do amazing things, and you know, thank you for jumping on this platform.
Hi, everybody. I hope everyone's having a great afternoon. Thank Richard for having me on this platform. I do marketing. I do marketing for small business to medium-sized business. I help scale their bottom line with online marketing. And it varies depending on what the business needs, right? So some businesses just need counseling, some businesses need websites, some businesses need like advertising, some businesses need social media. So what I try to do over the course of I've been doing marketing for about 20 years. So over the course of the last 20 years, I just been, you know, adapting to what the business needs at the time. When I first started, you know, doing marketing, I started with radio ads, and then it went on to social media, and then it went on to paid advertising online. So it just adapts on what the business needs. And I've tried to be educate and implement the right people to help them to navigate, you know, getting more sales, getting more leads, getting more engagement on the platform. I actually kind of prepared something real quick to kind of share um with the audience and just some data for people to understand the marketing space, what's going on right now, how to scale their business, and kind of like a direction, because I want to make sure that no one leaves this call without, you know, knowing how to get leads within their business every single day, and what it takes to be able to get leads. So I'm just going to share my let's go to desktop. All right, so I'm not going to go over this whole presentation because it's kind of long, but I just kind of put some points. Again, I've been doing this for about 20 years. I've helped companies do about $10 million in sales. Shopify, top 10, 30 under 30 entrepreneur. I mean, we have a marketing business right now that does six figures, about to do mid six figures by late February. But I wanted to show like businesses, right? Like I know there's a lot of investors. The key thing about marketing is not just one piece, right? You know, solo entrepreneurs usually only make about $40,000 a year. For me to run my business, there's different parts within my businesses. Like there's the call center side, there's the web team, there's the SEO team, there's the Facebook team, right? So there's so many different teams within one business. And you know, a lot of people, I know marketing gets a bad rep sometimes because, you know, a lot of people promise things that they can't do, but it's because there's so many parts within it that have to go perfectly for the marketing to work, right? So I want to talk about, you know, Neil Patel is one of my the guys that I first learned from as far as SEO goes. He talks about a lot of marketing right now. But he did a survey where he did about 100 companies making over $100 million, and he showed the stats about where they're spending their money, and a lot of them are spending it on organic marketing, right? But when you look at the stats about like the money that they're really making it from, you can see that organic marketing is the least returns at like 2%, right? Uh, The reason why social media, I'm not doubting anything about social media. I love social media. I'm on social media 24/7, but you have to understand the conversion rates. We were talking about, numbers earlier in the presentation. You have to understand your numbers when it comes to marketing your business. If you don't understand your numbers when it comes to marketing your business, you're going to be with those people who only make $40,000 a year because you don't know how many people that you need to get to be able to convert a sale, right? And the channels, like social media, only convert at 1%. Social media is very key when it comes to business because it adds trust, right? We had a speaker earlier on today. It does add trust. You're supposed to give valuable information to your consumer. Once someone looks at your ad or finds you on Google or finds you on YouTube, they're going to search through your social media to see if they can trust you, see if your business is legit. So that's why social media is very key because you need to, give information once they check you out online. People are not always going to buy at first, so you need to have those things going to be able to, if they're not ready to buy in September, might be ready to buy in October. They might not be ready to buy in a year, but as long as you're always there and you're top of mind, you're always going to have a chance to make the sale. Another stat I wanted to show is when it comes to social media, you have to understand, you have to look at the stats of what influencers, like there was a real big hype about social media at first, because it was new, people were making a lot of money. You had that, first effect where, because it was new, because people didn't know the rules, because the economy is good, a lot of people were making money organically and people thought, that's the way to make money. But if you look at the averages, as far as influencers making money, the average influencers, I've read a stat before, but here's a stat, is about $3,000 a month if you have about 100K. I've heard it was even as low as $1,000 a month at 100K. And that's because the conversion rates, businesses are realizing the conversion rates are only 1%. So, you having a business and just focusing on organic marketing is limiting your growth, right? There's so many other people searching for you online, and doing content marketing. If you're gonna do it well, it's actually expensive, right? Like you have to hire a videographer, right? You might, if you're really good, you're gonna have to hire a person who does ad copy so your storytelling is really good, right? It could be really expensive. And if you really want to grow online, just to show you, we've done about last year, we did about 17 million impressions within a 3-month time span. And then we had to post 3 times a day, right? If we're not posting 3 times a day, we might get, a video that might go, viral. But we're not going to get the growth. So in that time span, we were able to grow from 25,000 followers to about 120,000 followers. And it's because we were posting viral content that's really expensive every single day to be able to get followers. If we only post 2, we weren't getting enough followers. You have to, and this is why I go back to saying about you have to understand your numbers, because you have to get to a large volume of interactions to be able to get the followings, right? Conversions are only 1%. And I just want to show you a clip from Mr. Beast to show you how expensive organic content really is. Everybody knows Mr. Beast. He's the king of content, and everybody says content, content, content. But if you watch this video, you'll realize all the content that he does, his margins are really thin, and he has to put millions in his content to make his money back. He makes his money mostly off of products that he sells, not the actual content. So take a look at
just
this.
spend it on videos the next month. We literally like have razor thin margins and just reinvest it all.
That's wild. Is that ever dangerous? Like, does a video ever not yield a return you're expecting? Where you're like, this one hurt
a ton of them. Yeah.
Are you spending $4 million on a YouTube video?
Well, $4 million a month on videos. Yeah.
I remember I bought Evan a Rolex once for like 20K. And
I actually remember that vlog.
Yeah, so you see there, that's Mr. Beast. He shows you that he has to spend so much money on his organic content alone for him to make money. And he only recently became a mega millionaire because of his other stuff, like his Beast Burgers and all his other products. So in my belief, right, organic content is good, but it should be the last thing that you do when it comes to your business, because you have to do a lot of it. And it's still as expensive, probably even more expensive than running ads. And that's what I want to get to next is running ads. And a lot of times people don't understand what it costs to be able to not the cost, but the conversion rates on when it comes to running ads, right? So on Shopify, the average conversion rate is around 2.5 to 3%. What that means is out of every 100 people who come to your site, as long as it's targeted traffic, only 2.5 to 3%. So there's only 2 to 3 people out of 100 people who come on your site is going to buy. And a lot of people don't realize this at all. They think that I can just post on social media and then I'm going to make all these sales. It doesn't work like that. And you have to understand that when you post on social media, it's not the views that lead to the sales. If you look at your insights on social media, it's the people who look at your profile views, right? And then go to your site, right? Another thing that I want you guys to pay attention to, especially realtors, that I found out probably in the last couple of years, you guys have the wrong site for lead generation. And for realtors, lead generation is the number one thing, right? I just want to show you another stats. This is from Lead Pages. So your conversion rates on Shopify are 2.5%. Your conversion rate on Lead Pages are 25%. If you're really good, 30% or higher. I've even seen 40% before. I've done 40%. And basically what you want to do, right? Like if I look at my lead page and my website, if I come to my website, it has more information, which is good later on, but a lot of people skim websites, right? So the information is not good on the front end. The information is good on the back end. So what I do is I always have a lead page. It doesn't matter what I'm selling. If I'm selling goods, if I'm selling a service, I always want a lead page, because I know only 1 to 2.3% is going to buy from me. Two, I know that, I can get more conversions this way, knowing that I can get people off of the platform onto my system. And when when they are ready to buy, I can nurture them throughout the process. So they might not be able to buy today, but maybe through the course of a year, they'll be able to be a client of mine, right? And that's the other big thing about Instagram, is that if I post today, right, I might get to 5,000 people, but I could post tomorrow and I only get to 1,000 people. That means that, I'm not controlling my own traffic. The people who want to see me on a regular basis, I'm unable to give them a steady flow of information that's going to help them, right? So that's why you always want to have a lead page. And then I want to go into understanding the internet, right? The internet is all about keywords. I know Instagram recently changed their keywords and stuff like that, but the internet is all about keywords. Whatever people are looking for, that's what you want to post if you're doing it organically. And you want to understand the keywords that people are looking for. So when you're sending the traffic to your site, you know your numbers exactly, right? So I'm doing this campaign for an beauty company, and their main product, we had to find a product for them, and I had to find a product that was going to get them conversions and had a lot of people looking for the product. And the only way I was going to find that is by doing the research. People could write this down. I'll probably put it in the chat. It's called SEM Rush. Every business owner should have it, because it's not only going to help you organically, but it's going to help your business in general. As far as SEO, right? Even if you don't have the money for ads, which I think is way cheaper than, doing it organically, professionally, you can still have SEO. You can, still do it organically, but not understanding the questions to ask, right? What are the most common questions people are asking for? And if I were to go to TikTok, right? TikTok is the exact same way as, Google and YouTube. It's a search platform. So if I understand what people are searching for first, when it's time to do the content, I'm not worried about what content I'm supposed to do. I'm not worried about, if I'm doing too much or I'm not saying the right things. I can see right here, okay, if I'm doing something about castor oil, what are the most common questions I need to do in my content, right? What are the best 3 castor oils? I understand what questions I have to use. And then on the ad side, I understand what people are searching for and the SEO side, right? I'm going to show you later on how your ads help your SEO based off of engagement, because all of these platforms are based off of engagement. So if you feed the platform engagement first, later on, when you want to just grow organically, because you're feeding the people or feeding the algorithm with the right people for the right topic, it's going to reward you by giving you more people within that same topic, because it understands who your ideal audience is, because you told it to it, because you spent money, telling the algorithm, this is my ideal audience. This is what I want to talk about. I have people staying on my page because, I know the questions to ask. I know the relevant questions to answer to be able to convert a sale or get people to stay on the platform longer. Right. So you could understand every single word on the internet before you make the content, which is very key. And then you could also understand, I won't go into too much detail, you could understand what word is a conversion word and what word is a word people are just looking for information. And that's how you can see the intent. We can understand the intent of each word, right? So if people are just typing castor oil for information, then we're not going to put ads on that word. Why? Because, it's just for information. It's not going to lead to conversions. You want to be able to get the people who are looking for the information, but also who are looking to buy, right? And there's other metrics that you can go into. So, right, if I go into my ad manager, I'm able to see, how many people are searching for each word, right? Like if I want to do something a little bit more, I can understand how many people are searching for realtors in Toronto. I can understand, how many people are bidding on it, how much of a change and increased. I can understand what the change was, how much competition is bidding on that word. What is the cost per click, right? And that is also important, because if I go back to conversions, if I understand how much it costs to get a click, understand how many clicks it costs to be able to get a conversion, then I'm able to know exactly how much I have to spend to make a sale, which is golden. If I knew every single time I spent $3.40 and I got a lead and I needed to get 100 leads to make a sale, I know exactly, like, it might cost me $200, $300 to make a sale, and maybe my sale's 5,000 like it is right now, or 10,000 if I'm a realtor, 20,000 on some homes, right? So understanding this is the way to be able to get leads automatically, right? Not only get leads automatically, but understand how I'm able to scale my company, right? And that's basically the gist of it. I have a couple more things, like if you want to get some ads, there's a special going on Google right now. If you spend a little bit of money, you'll get $1,800 free ad spend. And for people who don't have any money, this is running to September 30th, but I think there's another one that's running even longer till next year. We can help you get $2,400 from the government, as long as you're a business who has one employee that's been working for at least 3 months, or have made $30,000 in your business. You qualified for this grant. So basically, this whole thing, running your ads, understanding your audience, understanding your keywords, is basically free, and you can really scale your business for a good $5,000. You can definitely scale your business, get your first couple sales, and then reinvest in your business. Yep, that's me.
Yeah, man. So far, so good, man. Loving the insight that you're giving. Corey asked, what the site was, so I sent it over there. I just want to correct. That's correct, right? Semrush.com,
Yeah,
right?
SEM Rush, SEM Rush.
SEM Rush, okay.
Yeah, semrush.com. Yeah, it's a very powerful site. It's a very powerful site. It helps you to understand, all your keywords, even if you're competing with something like, Remax runs these same type of words, Zillow's run these same type of words. If you understand even lower, that doesn't have as much search volume, but it's a higher intent, sales will come in easier. Like if I run an ad, if I say, Toronto realtor near me, my leads might be more information leads. But if I say, a homes for sale by the lake, or homes for sale with a pool, or homes for sale, right? If I go detail into my search and I understand those words, right? Those words will lead to better conversions because they're lower down in the process.
Okay, so I know like I also run ads, and of course you gave me a lot of tips in the past, right? But I if you do it, if you make the keywords too specific, right, then you may be paying less per lead, but you're not getting as much leads coming in, right? But I guess maybe it's more quality, but at the same time you don't get as much leads coming in or something like that, right?
That's why you do both, right? So you do, because you have to, the conversion rates, right? Like I know a lot of people that want the quick sale and stuff like that, but marketing's a long-term game, right? Because even if you were to go to Apple right now, Apple Store is going to be filled, but not everybody's ready to buy right now. The marketing side is about the long-term game, right? You're going to make your couple sales earlier on, but the longer you're doing the advertising, the more people trust your face, the more people see you on a consistent basis, you're going to be the one they come to when they're looking for the information and looking to buy, right? Long-term keywords that are specific get less traffic, short-term get more traffic, even though the leads are not as, I wouldn't say solid, but they're not ready to buy right now, right? So the short term, you have to really work them. That's why it's important to have your CRM. That's why it's important to have first content. Like when you're getting your leads, you got to call them within the first 5 minutes, or they're going to somebody else. You got to remember, these people are online, they're scrolling here, they're clicking here. There's so many different apps, right? So you have to keep them, you have to get their attention when they care about the problem right now, right? And that's kind of like the difference between Google and Instagram and organic, right? So, Instagram, it's all about, if I see something that is similar to my interest that I like, I'm gonna click on it. I might get the lead, I might buy it, right? But Google is more like, I have the problem now, I'm searching for the problem, and then you want to be able to have the conversation, understand their problem, and then even if they're not pre-qualified or not ready now, you have that information in your first point of contact, and then you have your follow-up through your drip campaigns, through your email sequence, through your text sequence and stuff like that, right? And that, you nurturing those leads down the line, that's when your money's going to come in, right? 90 days down the line. I did an ad campaign. I started doing ads probably again about 6 months ago, and only like now that I'm getting like $5,000 contract. Like last month in September, we did about $25,000 in sales. Right. The next month is going to be another $40,000 in sales. So like it's not an overnight thing. You got to tweak different things like your headline, like the way you're doing your ad copy. It's a long-term game. And if you play it like that, you'll always be successful.
Okay, okay. That's amazing. Thank you so much. Do we have any questions for Korey? Korey, Chloe said that's interesting. That's good. That's great that Chloe got some, value from the talk here. And that's what we're here to do on this platform. And what Korey talking about, building your brand, that's what this platform is for. We're gonna create ad material, put you out there like as another.
I think your mic cut out.
Oh, can you hear me? Can you hear me now?
Your mic cut out.
Hello? 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 Oh yeah? Hello?
Slow.
Hello?
No, can't hear you.
Okay, can you hear me now?
Yeah, you're good now. You're good now.
I just switched the microphones. It's good to have a backup. But yeah, so what as I was mentioning is what you're saying is get attention on you, right? And as you get attention on you, keep putting yourself out there, right? And I agree with that 100% because now we're in a social world. Your social presence is big time. you know, and I'm grateful to meet a lot of you from social, you know, and you know we're actually forming relationships, you know, from this World Wide Web, and then you get to meet you in person. You know, it's amazing, right? And you know that's pretty much what every single person's doing. You know, every single person's building their brand. You know, you're building your brand. You're going out there. You're just sharing what you know, giving more insight on what you know, right? And as you do that, you know, then I guess more people over time, eventually, then they'll like, okay, hey, I'm ready to work with you, right? That's what you're saying.
That's what I'm saying, right? But you have to have the right offer, right? It's not just being out there. If you don't have the right offer, it's not gonna work, right? Like, you really have to research your offer. I can promote a million times. There's people, billions of people who promote all the time and fail their ads. I think like the success rate is only like 22%. So you have to have the right offer. If I do not have the right offer, the right headlines, like if I go back real quick to my lead page, right? If I go to my lead page, right? If I just don't have this 24 hours here, it's not going to work. If I don't have little things like, you know, without calling, without door knocking, that won't work, right? If I don't have my whole thing on one page before scrolling, it works better on mobile. They're not.
Are you showing it to us? Because we can't see your screen.
Oh shoot. I thought I shared it.
There we go.
All right, my bad. Sorry. All right, so if I like for my lead page, if I do not have, okay, so simple, little words like simple. If I don't have simple in my headline, it's not going to work. If I don't have this headline calling out who I'm trying to work with, it's not going to work. If I don't have things like 24 hours in my headline, it's not going to work. I'll give you another quick example too before I go. For realtors, just want to show you a site. No, there we go. Okay, so here's a Real Geek site. This is for realtors. There's KV Core. There's other sites like this. If I'm a real,
Zillow and
yeah. Well, Zillow's a little different, but there's CRMs that convert better. So if I were to do Keller Williams site, if I was just on the Keller Williams site and I just sent people to the Keller Williams site, so let me just type in three. So if I went to a regular Remax site, allow. It's not popping up. But if I went to a regular Remax site or whatever, it's going to give me all this different information, right? If I were to send them to here, the customer is going to get lost, right? So when I run ads for realtors, I have to say within my ad, let's say get homes that are under 500,000. I got to pick a particular city. It's just random, right? So I'm going to send them to this page, right? I'm going to pick the lowest price, right? I'm going to send them to this page, but before I'm able to do anything, I need to be able to capture the information, right? If I were to go to a Keller Williams site, a Century 21 site, I have to scroll, do all these things, and your lead is going to cost you $50, $100, or $150. My lead's going to cost me $10, right? And I just changed one little thing, adding a call to action, right? And that's really what the difference is between a successful ad and not a successful ad. That's why I kind of showed my lead page is if you're not capturing the lead at first, you're not going to have a successful business. I need to be able to capture my leads at 10, 20, 30%, $10 a lead, $20 a lead, and then at scale, right? I don't know if anyone's ever worked at a call center. I've worked at a call center before. It's not I call 1, 2 people and those people are, you know, automatically going to buy from me. I need to do this at scale. If I don't do this at scale, then I'm not going to be able to get the result that I want, right? So having the right lead page, having the right website, saying the right words is the difference between a good ad and not a good ad, right? It has to your ad has to go align with your lead page, right? And that will get you the lead. And then after that, it's all about calling those leads within the first 5 minutes, right? You want to aim for every single month getting 100 leads, right? Anything less, you're not guaranteed to make a sale. So anything that you're aiming for, $10 to $20, right, is what your average cost. I don't think I've ever done anything that was like $30 or $50 a lead unless I'm running it to an actual realtor page that doesn't have a lead capture page. But $10 to $20, right? You'll be able to get those leads, $1,000, $2,000. You'll be able to get 100 leads, and those 100 leads, you'll convert 1 to 2 of those into a sale. And then later on, if you've called those and interacted with those leads, you'll be able to close more later on, right? But yeah, that is the most important thing is your lead page and your headlines and your offer.
Yeah, I love how you broke it down, because I will be honest, sometimes I'll start campaigns and after I notice, okay, they're not converting how I want to convert them. So I'll shut them off and after I try something else, right? But from what you're saying too is like, yeah, you want to get a bulk of them in, even and then as you get them in, then you maybe a small percentage of those, and then as long as you know your numbers and the return that you're getting, then it's worth it.
Yeah, correct, right? Like the best thing to do though first, if you're not sure that you have the right lead page, what I do first is I test because Facebook has a lead form. I know the leads are not as good. I know sometimes you'll get bots. I know all of those things. But if you want to test your offer first, use that first. Because if that works on that page, then you can go ahead and make a lead page off of that offer that you've done on that page. And then your leads you won't have those bots. You'll have more qualified people that are calling you. But you want to test. That's what marketing is about. And that's what a lot of people don't tell you is, marketing is about testing certain things, right? First, I have to test a lead page, and then I have to test the video, and then I have to test this, right? And that takes a long period of time to do. I know a lot of gurus say, okay, do this, and then this result will come, but they have to test it first. If you allow your marketing team to be able to test different things, your A/B testing, your different images, your different wording, once you have it, you might waste a couple $1,000s testing, but once you get it right, it's just cash on top of cash on top of there because you understand your numbers, right? So,
hey, all right, man, Kory Miller. Thank you, man. You went in deep. Any questions for Kory before he signs off on here? He's gonna stick with us to the end, though. He's gonna stick with us to the end. But any questions for Kory? All right, man. No, I appreciate you. Appreciate your time. Really informative. We got some hand clapping. We got some, that's interesting. And yeah, this please share your contact, how people can connect with you.
So yeah, you guys could get at me at BizCore. BizCore's either Instagram. I'm all over. So Instagram, TikTok, Facebook, BizCore. You type in BizCore, I'll come on. If you want a free consultation, we can like go over, kind of the keywords you might want to attack, how you want to attack your organic marketing, and go over strategy. And then go from there as far as if we're the right fit, right? Because like you always have to have a good product. That is the number one thing, right? I can do all the marketing in the world, but if the product is not good and it's not a market fit for what the market cares about, then you can do all the marketing you want in the world and it's not going to work. So I'm happy to help. I'm happy to give consultations and stuff like that. Yeah, that's it.
You're talking about a $4,000. I guess there's some credit that people could take advantage of on advertising.
Yeah, so they can Google's giving away $1,800 if I think you spend $1,200, and then you can get that $12,000 or $1,200 from the government of Canada as long as you make over $30,000 in a year, or you have one employee part-time or full-time, right, for 3 months. So those two things that you can get, and then yeah, I can do all of those things for you. I'll help you set up the ads on Google. And then yeah, what we do is just find out, the right ad copy to put and then test your ads and you're good to go.
Okay, thank you so much, Kory Miller. We
Thank you.
appreciate you for being on the session. Now we got Korey again. Korey MacKinnon. You know, it's a powerful name. Korey.
It is. I don't think I've been on one call where I've actually seen two Koreys that spell it with a K. So I always tell people that's the right way to spell it. My parents wanted to be different. So, but I really want to appreciate everybody here for being on this call. So thanks for taking the time. I know this is, hey, this is going to be probably going to come in at like 2.5 or 3 hours, and you are all winning the marathon champ here when it comes to Fight Club and learning about real estate investing. So would love to see some faces though. Turn on your cameras and say some hi's here.
Yeah, for sure. I agree. Yeah, okay. We see Chloe there again. Okay, yeah. Nice. More faces. That's amazing.
These are our speakers. How about everybody else here, guys? Maybe I shouldn't push too hard. We might get people dropping off. But...
They're taking it in, though. They're taking it in. All right. So Korey, man, thank you for joining us first off. I'm following you obviously, so I see all the things that you have going on. If you don't mind, just share your story with us. Kind of like what got you into investing. So you're a real estate investor, correct? And like let us know what kind of investments you're looking at now. But I was to take us back, kind of like how your journey began.
Will do. And I just wanted to, first of all, thank you, Richard, for the opportunity to pour into your audience. And I just wanted to thank some of the other speakers here because I've been, obviously taking some notes here. And, Chloe, definitely the importance of getting in the game is important. Everybody's looking at numbers and this and that. But yeah, at the end of the day, there's always ways to pay down your interest quicker. The rate's important, but you just kind of like date the rate and you marry the property. And man, I wish I would have gotten to the game earlier. And I'm going to show everybody like an image of where we are in the real estate investment cycle. And people are going to be going, okay, it does make sense. And even if you're an optimist like myself, I think it is a good time to re-enter the market because it has been a little bit crazy for the last 18 months. What other points do we have here? I like what Richard is doing here, obviously bring the community together. And I'm also all about health, for sure, Richard. So I'm a bit of a health hacker, health geek in my spare time. I probably enjoy learning about that just as much or more than real estate investing. And, Shaq, I love that you're talking about your 3-step process, and the power team is very, very key. We always talk about the core 4, which if people want to make a note, that's going to be your investor-friendly realtor, your investor-friendly lenders here, like some of the people that were talking to us on the call. You should have a great home inspector, and then you need a lawyer to transact. Okay, that's all you really need in the beginning. Everything else kind of comes later. Yes, you're going to need an accountant and a bookkeeper and all those other things as you move along the path, but you can do a lot with those 4 people. And Korey, man, you're on point. And yeah, I always tell people that during I don't even like to say recessioning, but a contracting economy, one of the things that people are going to cut, they're going to cut marketing. And I think that's a mistake because right now is a great time to go and get a heads up on your competition, because if they're not spending, you can spend and you can gain the clients and just thrive better. And really, when we had an event that Richard attended last week, and it's like unless your business is over 500 people, like we're all very small at what we're doing, and there's no reason why a small business can't move really quick and do really well out there. You just have to be okay with spending money on the right things, and it's an investment in your business and in yourself. So. But yes, Richard, a little bit about me. Been investing since I was 30. So that's going back 18 years. Sat on the sidelines for probably 5 years. I was investing my money though and making a return on it. And the first investment that I did was a house hack. I bought a sixplex. I actually rented there for 3 years first. And then I ended up buying it from the owner. He put it on the market. He listed it high. He was trying to catch a flyer at the time in a very flat market. Back in 2005. So I bought it, and I was doing the BRRRR before there was even a term for the BRRRR. So just moving along really slow. I was doing things very slow and methodical because I didn't know any better. There really wasn't any training out there. I think I learned from Mike Holmes. I bought all of the CDs for Homes on Homes. But then I hired my first coach within a couple of years, and that's when I started moving faster and just scaled up the portfolio. And now we do a lot of multifamily. We do storage. We do, I like furnished rental, but I tend to do medium-term rental, not short-term Airbnb type of rentals. Been doing conversions and getting into some land here too. So I'm not trying to be a jack of all trades, but I find over time you can actually level up into more complicated strategies. So I don't want people to skip too many levels at first. But we also have a coaching and consulting business where we help business owners, we help real estate investors, just to go, move down that path, get really clear on what their path is as a real estate investor, and then to be able to go a little bit faster if that's the route that they want to do. So I've been doing that ever since I retired from corporate, which was about 10 years ago. So many people came out of the woodworks wanting to know how I did it. And that was my background, was building training programs and systems and all those different things. So I put together programs for the past 8 years, and we've helped, hundreds of people do a lot better in real estate. So I guess going back to my story, didn't come from a whole lot. I'm sure there's people here on the call here. Throw in the chat if you, didn't come from a lot. You came from humble beginnings. My parents had that talk with me when I was probably grade 5. What kids, this is when the Air Jordans were coming out. And I was, well, how come we can't get nice running shoes, right? And my parents said, hey, we'll always provide you with the basics. But if you want that difference, you got to go and figure out how to make money, right? I was like, I can actually go make money. They're like, yeah, you could easily go get side jobs and cut grass and shovel snow and get a paper route. So I decided to do all that. And I've had jobs ever since. So, I just figured like everybody in life is called to be a leader at some point. I got called to be a leader at a young age. Just not everybody takes that phone call. Right. So here we are on a Monday night pouring into people here. So, yeah, but your audience better than I do, Richard. So how else can I?
Yeah. So the
the
story was great. The story was a nice story, and the fact that you said humble beginnings, and definitely we're looking to connect with people from all levels, right? And of course, someone that's seasoned like yourself to be on this platform means a lot because everyone is kind of getting in their way, So if you don't mind asking, you said that you were doing the burr before the burr started, right? And you said is it from a course you said you learned, and then from there, like how did you build to where you said now you're doing storages, what was the process, especially if you didn't have any personal training, right?
For sure. Well, fortunately, I had some good people in my corner. My brother was actually my first contractor that I hired. He was he apprenticed as an electrician. That didn't work out because they were giving him all the terrible work, like just pulling wire in the snow with no heat. And then he apprenticed as a plumber as well. And he was also working as a carpenter. So I was lucky to have him in my back pocket, which was helpful. But I think in the beginning, there isn't a lot of playbooks for real estate out there. And when you learn how to when you realize that as soon as you buy a property, you are a business owner, you need to start treating it like a business. You need to come up with a name, right? You need to come up with a logo if you want people to take you seriously. And then you got to actually start putting the right people on your team. And you need to start, even doing things like marketing, not being afraid to pay for marketing and to get more eyeballs on, let's say, the units that you're trying to rent. Ever since Kijiji had the feature where you could bump it up or feature it, I was just saying yes, because the sooner I can check the box, get that unit rented, then we're just on to the next one and the next one. And they call it currency for a reason, right? Money wants to be moving. If it stays in one spot, like in a pond, what happens in a pond? Things just sit there and they fester and they go green, right? But in a running, rapids there's a lot of white water, there's a lot of oxygen, things are moving, things are happening. And also, to piggyback on what you mentioned earlier, Richard, like frequency is a real thing. Like when you're excited and energized, like your body is actually working at a different frequency than somebody who's moving slower and they're frustrated and they're not trying and they're just, having a pity party. So all these different things are very, very important. But yeah, as soon as I got a mentor, I remember one of my coaching calls, he's like, we're not talking next week until you have a name and a logo. And I was like, really? So we're just not I paid for the coaching. You're not going to have a call with me until that's done. He's like, nope. I'm like, okay, I guess I know what I'm doing this week. Right. So that's back when the Walmart happy smiley face was, really big and being marketed about 20 years ago. So I just said, okay, Yellow House Rentals. A lot of my properties in London, Ontario were made of yellow brick. And I just figured yellow's a nice bright color. It's one of the most recognized colors out there, yellow and red, right? From a marketing perspective, Kory, I'm sure you'd agree. People can see it from the furthest and it gets people to stop and actually pay attention. So still have that company, and we run a property management company as well, because it helps me insource what I want to have the most control over, which is my assets. And then we can actually serve some other people here too.
Hello, I'm unmuted. Yeah, okay. Okay, so now talk to us about, like in terms of the storages. Why did you choose to go with storages, right? And then also I know multifamily, because I see I there's a few people I know in here, and I know they have you made duplexes, triplexes, and I don't think they've crossed over to that multifamily, but they have that interest, right? So, what made, like, in terms of getting a multifamily, like what should they be concentrating on? Okay, they got their logo, they got their business, now they want to get into multifamily. And then even with storages, like, why storages?
For sure. Well, and again, I think it's awesome that everybody here is starting somewhere, because you don't even have to own a home to house hack. I was actually house hacking an apartment. All right. I went and found a 2-bedroom, 2-living-room building. So it was a century home, right? So they used to have sometimes 2 living rooms, right? And I actually recruited an extra roommate. So I said, look, guys, I got the job where I'm like a traveling salesperson and I'm just crashing here a couple times a week. I need a place to put my head down. I'll actually take one of the living rooms as a bedroom, and just found a way to make it work. And my rent wasn't free at the time, but it was half of what the other people were doing. But I took on the responsibility of the whole lease and paying the utilities and all that sort of stuff, right? So getting in the game as a house hack is awesome. Living in a duplex or a triplex, one of the first books I ever read was The Wealthy Barber, because the author is actually from Sarnia, Ontario, David Chilton. So that book is very famous around where I live. So I'm from Sarnia, Ontario. And I grew up in a duplex too. So I was exposed to this stuff at a young age. And if people are kind of turning their nose up at it and going, I don't want to live in a duplex, I don't want to live with roommates, I got to tell you, if you make those sacrifices now, you will be able to do much more of what you want to do in the future. So I was literally living in the rental with roommates and things like that right up until my wedding day, or my wedding week, because my wife was like, there's no way I'm moving into the sixplex. So I totally understood that. But up until the age of whatever that was, like 33, was living in that rental property, right? So, and I still hold that property today. It's a great property. I want to hand it down to my kids. But as far as leveling up into bigger multifamily, it's not as big of a jump as you think it might be. Now, I know there's people out there that teach you how to buy big apartment buildings. And I don't recommend getting into 50, 90 plus unit buildings right off the hop. I think everybody should have a really strong foundation and baseline when it comes to real estate investing. So there's nothing wrong with getting involved with smaller properties at first. My biggest property is a 7-unit right now, but I'm going to be building a 29-unit building. And we've got a lot of units in the portfolio. So you can do well by getting yourself, 20, 30, 40, 50 doors over time. And it doesn't take a lot of buildings for you to be able to retire and do really well. Like Chloe was saying, like I don't have a pension. I'm not sure if you're going to have a pension, Richard, but these are the things that we will have that will be like our pension once we're ready to kind of just pull back and not work as hard or work as much, right? I'm sure we're always going to work hard. But so it's really just a mindset shift that, like, these things really aren't that much bigger. They're typically even better. They're purpose built, right? When you start to get into 12 or more units, they're going to be purpose built. They're going to be rectangular. They're going to be cut evenly, not like some of my properties that are kind of cut up all over the place because they put these together in a century home or something like that, right? And the lenders are going to look at you differently, especially if you have a resume that you've done this for a few years. Then they're going to be looking at the property first, then you and your resume second, and then your income and all that other stuff later. So they really want to see what the property is doing. Can it stand on its own feet? Are the income and expenses, do they all make sense? What does it appraise at? How are the rents? What are the cap rates? All those different things. So I think the most important thing, if anybody could take one thing from our talk tonight, is if you make money on the buy, if you know how to buy things on sale, or if you see an opportunity that other people don't see, like you can play the game of Tetris in that house for highest and best use that other people don't see. Like, I've bought in a property before where the listing agent didn't even know that they could have just moved a wall over, turned a bachelor into 2-bedroom, and then turned the commercial space into a smaller, space. They didn't need 1,600 square feet to run a corner store, right? So we just made it smaller, a 600 square foot niche hair salon. And then I took the rest of the square footage and I gave it to the bachelor. I made that into a really big 2-unit building. We increased the rents by over $1,000 just by doing that one move. I mean, it obviously cost a bunch in renovation money, But, by seeing those opportunities of what other people don't see, and by you being able to buy something on sale or get some favorable terms, which there are favorable terms out there, I think there's an all-time high for people selling with vendor take-back mortgages right now. Just go on realtor.ca, type in VTB in the filters, and you'll see a whole bunch of them coming up all over the place. And it doesn't mean that people aren't open to it, but if you know how to have a proper ask for those things and don't just do it right out of the gates, if you pursue a property that you like as far as you can, traditionally, it just doesn't work. And you let that seller know, like, hey, the only way this might actually work at the very end is just to bring up, self-financing. Like, would you actually finance this property a little bit? And I think we can actually make something work here, right? And if you can actually get face-to-face with the seller, not go through your realtor, and then the realtors are talking, so it gets from you to your realtor to the next realtor, and that realtor to the seller. I mean, just try to get everybody at the table and say, look, this is what we propose, and this is why it's going to work, and this is why it's a benefit to you, especially if you don't need the money right now and you've got a lot of equity in the property. Your capital gains are going to kill you. But why don't you try this, option instead? You might actually like it.
Yeah, no, for sure. That's some really insightful. You were talking about, having experience. Like when you go, you could show them, okay, I'm experienced. But also I know some people who maybe not have as many doors or the case may be, are partnering with, other companies or other investors. I know that's very common as well, right?
Yeah, there's three parts to any deal, 3 or 4, right? So, and I didn't mention like why I got into storage, so we can answer that next. But I just love to pour on you guys. This is my favorite. Tomorrow night we actually have
Let's go, man.
we have our own community, and we just pour into them till pretty similar. We go from usually 8 till 10, and this is my favorite parts of the week. But if you don't have the experience, I mean, you can learn a ton from YouTube and from being on webinars and stuff like this now. So the access to information is amazing these days, but there's so much information. So like, how do we curate it? I learned a lot from my landlord. So like, he had 25 buildings when I was when I was renting there, and I was running a painting company. So I used to work for Student Works Painting, one of the biggest painting companies in Canada, even though they're university based. I think I just talked to the owner this year because I went and did alumni talk. They did over $30 million worth of painting just for half the country. The other half did about 15 million, 20 million. So they're doing a lot of painting across the country. So I used to provide that to my old landlord. I said, hey, if you ever need units turned over, refreshed, I'll just do the painting for you at cost. Just pay me whatever my cost is, because I want to learn from you. And I think people have gotten away from that whole apprenticeship approach where, working for free is like, I don't want to work for free, right? But a friend of mine has a super successful business, and he went and worked for the owners of beachbody.com, P90X, like all those exercise videos. He went and worked for them for free for 6 months. He said, look, I'll work for you for free for 6 months. I will work for a dog. Just keep in mind, I am going to do something on my own in the fitness industry. I'll sign whatever you want, but I'm not going to sign no compete. I am not going to be your competition anyways. I'm going to be thousands of miles away in Canada, running a couple gyms. So that's what I want to do. And they were okay with that. He learned a ton from, those guys there. And, but there's 4 parts to any deal, right? You got the money that's required. You have the people or the team, the power team members. Then you have the deal itself, just like Stefan Arno writes about in his book, Money, People, Deal. But then there's also the equity in the deal, right? There's got to be some juice left. The juice has to be worth the squeeze. And that's what I mentioned, like making money on the buy. Those are very important. And you're always going to have a problem, because one of those things are always going to be a little bit out of balance. You might have too much money. Wouldn't that be a great problem to have? Too many deals coming across your plate, or just not the right team members or coaches or mentors or whatever, or groups like this that can help you get you to the next level. Or you don't know how to go and make money on the buy, be a strong enough negotiator, be a savage detective and person that can go and find and sniff out and search deals, right? And marketing is a great way, or not marketing, networking is a great way to do that. Like Richard was at our event. We have this thing called strategic shares. We'll let people go up on stage and just have an ask. Man, there was like 25 people lined up to do that. Like 1 out of every 3 people went up on stage to go and just mention what they wanted to do, right? And that really filled us up, because I'm like, people are doing business in this room, right? And that's that's the power of networking. I hope people on this call end up doing business. It's super important. But just quickly, why we got into storage. I like commercial if it's the right kind of commercial. Commercial is really changing these days. Retail space, man, I don't know. I used to work retail when I was young, when Kmart was around. People remember Kmart.
Yeah,
Walmart took us out, but man, retail is so different. You don't need a storefront now to make millions of dollars. You just need a great product, like Korey was saying, and you need to market it properly, and people need to know about it. But you know, you look at the storefronts on a main street of a city. What's the most popular tenant they're getting these days? It's going to be cannabis stores, right? It's just crazy what's happening in retail space. But I liked storage because if someone doesn't pay the rent, you can literally overlock their unit, put it on bid13.com and go auction it off the next day. Obviously, we work with people and we try to let that happen. But when someone just goes dark and they're not responsive and none of their next of kin are answering or anything like that, or they don't give us that information, then we have no choice but to auction off the unit and get that. You can just start the clock over again, as opposed to the landlord tenant board these days, which is kind of crazy in Ontario. Unless you do all the work up front, which good property management companies do. But even then, once in a while, we're getting more people late on the first of the month than we ever have seen before.
Wow.
We used to give out 0 N4s, and now we give out maybe 4 or 5 every month, and they always end up paying. But at some point, one of those tenants is going to pop, and they won't be able to make the payment, and then we're going to have to go to the next level and maybe get a hearing or whatever, right? So, commercial, when done well, is a good income source.
Okay, so so the commercial units, if they don't pay you, it's like similar to the landlord tenant where you have to give them a notice, like, and or you said it don't, they just lose
You
it.
should give them, well, you should give them written notice. We give them email, snail mail, all that sort of stuff, phone calls and texts up the yin yang. But if they're not going to reply to you, then it's like, hey, we've got to do something with your stuff here. And people will pay good money for these auctions. There's you know, because I was talking to some of the people that win these auctions, they're like, yeah, we find some neat stuff in here and we usually do well. So it sounds bad, but we've had to auction things off 3 times in the past year. We've made more money than what we've been owed from the auction.
Oh, wow.
Look how many shows.
So if they owed us,
those
yeah,
shows,
I mean, I
right?
grew up with Storage Wars and all that
Wars.
stuff, right?
Yeah. So with the storage unit that you have, do you own the whole storage unit, or you could own like a portion of them? Like, is it kind of like multifamily where you have to buy the whole facility, or is it something like residential where you could buy like a selection of units?
No, you typically, at least this is what we did. We bought the entire facility. So it's out in Petroleum, Ontario. It's not a huge city, but I was looking at storage for about 5 years, and I highly recommend that people, you take your time learning about your investments that you're going to be buying, because these are big investments, right? But don't take forever either to do it. It's just these storage facilities don't come up for sale very often. I actually got tipped off from someone else, one of my former clients. They were in the market for some storage and they couldn't afford it. So they told me about it. I paid them a finder's fee for it. And it was actually because someone couldn't close. They got a little bit spooked on closing and they weren't going to close. So they needed a closer. And I honestly, I did about 30 minutes worth of research because I knew the industry. And I just saw that there's only one other place in town that has storage. They're way older than my facility is, and they're higher priced than I am. And they have a 0% vacancy with a waiting list. And, there's other metrics you can do. You can do the math per population and make sure there's not too much density, which there wasn't. So, I just said, hey, for 950 grand or whatever we end up buying it for, it's a no brainer because we bought it at a 6 cap and we ended up pushing it right up to an 8 cap just with a few rent raises and filling some empty units and stuff like that. So it was a great deal out of the gates. And the owner wouldn't give me a vendor take back, which I was kind of disappointed in because the owner was saying he was going to do that for the first person that dropped out. And the realtor felt so bad. He's like, you know what, Korey, if the owner won't give you a vendor take back, I will.
Wow.
So he gave me a $200 vendor take back on it.
Oh, wow. Okay.
And he just extended it too. So pretty sweet.
So
if you get yourself in that situation, you'll be able to come up with these kinds of deals too, right? So
yeah, exactly. It's you're just moving with it and then how it falls in line, right? But the vendor take back, I am hearing that a lot more, the VTB, right? And you said that particular owner didn't want to take it, but I'm hearing obviously there's many benefits to it. So what was the reason that someone would not want a vendor take back?
Usually the biggest reasons why people won't do a vendor take back or self-finance, be the bank on that property. It's not because they don't like the property. Usually they're the best person to give you that loan because they know the property inside and out, or at least they should, right? It's usually because they don't understand it, right? So people are afraid of what they don't know. So they're going to be afraid of it. It hasn't been explained to them properly. I've held a vendor take back before just to make a deal work. It was like 50 grand for 3 years just to make the deal work because someone wanted a CMHC mortgage product. But they either don't understand it or they need the money. They just need all the money out. They don't have much equity in there. And they're like, I'd love to give you a vendor take back, but it's like, I don't have much equity in this, or I'm getting a divorce and all the money is going this way or that way, or I got to pay off debts, or I need it to go buy something new. But for someone that's owned that thing for 30 years and they pretty much paid their mortgage off and they're retired and they don't want to trigger some really big capital gains, or they want to stretch that out over time, that's when it actually makes the most sense for them. And if you don't pay, like, they're taking the property back. So they have all the security in the world that they want. It's just, I find so many people will go on some of the first appointments and start talking about it right at the gates. It's a bit of a dating process. You got to take the analogy of dating, through this kind of a process. You date and date and date, and then you maybe talk about the vendor take back when it's appropriate, right? Because if you ask inappropriately, you also receive inappropriately. That's just the way the world works, right? But if you, so I've done a handful of vendor takebacks. They're typically going to be with people that know what they're doing. They've been around when mortgages were actually exchanged. Like when my dad had a mortgage when I was young, it was very common for mortgages just to get handed over to the next person, right? It did be assigned. And that's not as common now. And obviously the banks wouldn't make the same fees and commissions and things like that. So I think it's great that the industry has evolved and just so many more people can get involved, and it's just a bigger part of our GDP. But when you get people that have more gray hair than I do, they're in their 60s, maybe they'll just understand a lot more. They're probably a business owner. They've owned properties before. Maybe they received a second mortgage before, so they want to give it back and pay it forward. Or there's just some people that are open to it anyways, because that's they just know, like, whenever I'm going to sell some of my future properties, I'll offer vendor takebacks because it just help me make more money in the future.
Okay. Kory, I have one final question for you. Because we're talking about getting it on the buy, making money on the buy, right? Right now, with the market, we've seen the stats, we see what's going on, right? Here in Canada, like even going to the multifamily conference, it seems to not be as attractive, right? Are you still looking in Canada? Are you still investing in Canada? And how can someone go and find something where they're making money on the buy right now?
Hey, great question. I find that people are always looking for the easy path. And we ran a land development masterclass in the winter. And we had the fellows out from Geofocus Group. If you guys have never heard of the Geofocus Group, they're like second generation.
I grew up with them, that Adam Altobelli.
Yeah, Adam Altobelli. So I'm going to give you a quote from Adam right now. He's like, you know what, Kory, if people can't make money here in Ontario, like good money, how do you expect to make good money anywhere else in the world? Okay, so if you can cut your teeth and learn and hone your skills, and this is the skill set, discussion, right? So if people don't have the skills to negotiate, to go and find great, properties off market or on market or all these different things, because there's a lot of little subtleties that I've learned over the years, and I can give people some tips here on the call. But if you can't make money here, how do you expect to make really good profit? You'll still make money elsewhere, but will you actually maximize the amount you could make elsewhere? Probably not. So I think it's actually a great market. Like when you actually look at the fundamentals of investing in Ontario or in Canada, immigration is not going to stop. It's still hard to build new properties here because there's barrier to entry and it's expensive, and development fees and time and permit costs and red tape and all that sort of stuff. So supply and demand is going to be in your favor if you can get a piece of real estate. And Daniel Foch, who spoke at our event, he's actually at our event a few times. He's like, Canada is really going to become, and I feel this way as well because I've spent some time over in Europe, it's really going to become more like a European country, even though we don't have that same density. It's going to be owning real estate is going to become rarer and rarer and more of a privilege. It's going to be harder to do. So you might as well figure out a way to do it right now. And even if people don't have money for a big down payment right now, you can still invest even $1 in, websites like Addy, or you could go invest into like a REIT, real estate REIT like Graybrook or Equiton or something like that. Go put your money into a fund, because your biggest thing is two things. Okay, you need to learn how to make more money. So get yourself some sort of a job where you can get unlimited income. And my favorite was always sales. Sales or some sort of an opportunity where you can help somebody grow their business and you get a little bit of equity in the business, right? So when you can increase the amount of money that you make and then you start getting a return on your money. I was only making 10% on my money when I wasn't in real estate, but at least I was learning how to make a return, right? I was investing my money, because as soon as you can learn how to multiply your money, get that money pregnant so it grows into more money. When your money is making money, that's ideal, right? Because lots of times people are trading time for money, which is not a good trade. Then they get into business and they learn how to make money with less time, which is great. So they earn more per hour. But when you can actually invest your money into assets, and then those assets make more money, when your money is trading, like your money is making money, that's the ultimate trade, right? And you can just keep throwing gasoline on that fire too.
Yeah, wow, that's amazing. Thank you so much. Okay, we have some questions. I appreciate your talk, honestly, Kory. And this is something, the platform we want to grow it, man. We're gonna do it every month. So I invite you again in a future session, and I appreciate you for actually accepting, and as well as you, Chloe, Kory, and Natasha, who's about to speak as well, and Shaq Hall. Like, this platform, if more people come on it, like the amount of information that I have notes for days. I got so many notes over here from you guys. And this is what this platform's for. So I'm hoping everybody has notes right now, right? And that's pretty much what I wanted to go over. So, Kory, okay, I see you got something here on your screen.
Yeah, I just wanted to share this with people, because I know I mentioned that people need to understand where we are in the real estate market right now. So this is the real estate economic cycle. So we've just come out, I don't like to use the word recession, but these are just terms that are used. And we're obviously coming off, and we don't really have true hypersupply in a lot of cities, because we can't build quickly enough, right? But it's kind of like a balloon that was getting a little bit overinflated. So now the balloon's deflated a little bit. We're going into a bit of a contracting economy, but we're somewhere in here. We're somewhere between recession and recovery. And these are the different strategies that work in different parts of the real estate cycle. And if people miss out getting in here, you're going to miss the whole ride up. It's going to be a big ride up into another super cycle, right? With all this money that they're printing, getting into hard assets like real estate, it's a great hedge against inflation. And just look at all the strategies that are going to be working moving forward, right? But what happened, leading up to a few years ago was you could make a lot of mistakes as a real estate investor and not get penalized until you get caught at the peak of the market, and then the tide comes out, and you weren't doing your flips quickly enough and all that sort of stuff. A lot of being a real estate investor is actually being able to move with speed, right? Doing things quickly, right?
Yeah, definitely.
So the reason why we go through these things here, guys, is because a lot of people aren't going to know what they don't know, right? That unconscious incompetence, and then you get to what now you know what you didn't know, which is conscious incompetence. And then now you know it, but you still have to think about doing this. Is like tying your shoes. The first time my son tied his shoes, it took him like 3 minutes and 21 seconds. I timed it. It was painful. I wanted to jump in 100 times, but I let him tie his shoes because he had to think about it. And then it gets to the point where you look at elite level athletes or people that are really good at their craft, they just don't have to think as much about it because they've got so many reps in the bank, right? That's the unconscious competence. So I know a lot of people today have just been exposed to a lot of new information on this call. And I think that's the best part of being on calls like this, is just now you've been exposed to it. So now you know what maybe you didn't know, and then you can start on your pathway to master those things.
Wow, that's amazing. And I do want to also add that as I've been getting involved with the multifamily community, you get to realize that people are good people. Most times people think, okay, they're stuck up, they're not gonna come talk to me. But at every networking event I go to, everyone's so friendly. It's like a community, and everyone wants to share. Everyone wants to just give, let everyone know what they're doing, how they made it, giving tips, giving help. Hey, I have this person, so it's like everybody wants everyone to succeed, and I feel that's how it needs to be.
It's important, if you try to keep all your secret sauce to yourself, then, I'm just a big believer that we have two gifts in life. We have the gift of love, and then we have the gift of service. And for service to be truly of service, you need to pay it forward. And I've had some amazing people help me out along the way. And I don't know. I'm on a mission to help people struggle less. And you've seen that, Richard. You've seen the kind of events that we put on and stuff like that. I think it's important right now. People are struggling. They need community. They need to be able to ask questions, even if they seem like silly questions. Like, hey, I'm all maxed out and leveraged out. Maybe I know a lot of mortgage agents, and I'm sure Chloe can attest this. They're having to do just a lot of debt consolidation, a lot of planning, a lot of like moving parts. And hey, you might be in the penalty box for a little bit right now, but this is like, in a year from now, once you're out, it's going to be, this is what you're projected to be doing. Like just showing people what true financial literacy is so that they can actually understand it and still invest in the assets they want to invest in, right? So it's super, super important.
All right, great. So we get through questions real quick. I see there was a few, so I just want to make sure that we covered them. Shaq Hall said storage facility finance, and he put a question mark.
There you go. So what we did for our storage facility was that we actually went with a credit union. Credit unions, they call them a B lender, but sometimes that's just because some of their terms aren't as flexible as the big banks, but I still think they're an amazing lending option. And they will lend on things like storage. They'll lend on things like even like small businesses sometimes. My cousin is getting ready to buy a corner store, gas and beer and tackle and bait and all this stuff way up in Hornpain. And he's going to be funding it with a credit union, right? So they do look at alternative things because they're from the city or the area. Typically, they understand the risk. They understand that city better, so they're not afraid to do that. So yeah, credit unions for us was the way. B-Raw.
Okay, all right, good stuff. And then final question from Hamis: what is Addy and Appleton?
Yeah, so Addy, just go look them up. Like check out Addy. I believe they're a Canadian company, but they do have investments in Canada and the States. It's just it's basically a crowdfunding source to go raise capital for income properties, right? For real estate investors. And, they sell out their offerings and people get funded on there. There's I shouldn't say quite the process, but there's definitely a process if you want to put your investments on Addy to get it crowdfunded. But yeah, it's kind of cool. You can literally get started with as much as like $1. So,
wow. Okay. Well, guys, this is Kory MacKinnon. Kory, if you don't mind putting in your contact or even just letting us know, how to connect. I was at his last event. It was amazing. Amazing people. And the networking went all night. I was there. I think it finished around 10. I was there till like 12 midnight, just talking to people, connecting. So please let everyone know how to get in your space and okay. You got it there. Instagram. Okay.
Yeah, and Instagram's great. If people want to book a call, I just threw my calendar in there too. So jump on. Happy to give people just some insights, and whether it's a portfolio review or you need help with a certain strategy or you want to get some understanding on things of that nature, happy to help people out.
Okay. All right. Perfect. That's amazing. Okay. So Kory, you're good to go. And please stay with us to the end. We have our final speaker. I believe you guys know each other as well. Natasha. Natasha, are you here?
Yes.
Natasha.
Hi, Kory. So just so everybody knows, Kory is an excellent teacher. I actually took his course, Apartment Accelerator. It was the first kind of like teaching course that I took. It had a major impact on me. I was able to purchase the multifamily after that. So thank you so much, Kory. He truly does have a passion for teaching, and he's always available to help out. And I think it's great that we're on platforms like this to really help all of each other out. So yeah, thank you for having me today.
Yeah, thank you. And great stuff, Kory. All right, so then Natasha. So Natasha, right now, she's blessed us with her time. She's at the airport,
Yeah,
traveling
guys,
the world.
my flight actually got delayed. This is the only flight out, so it kind of is a bit of an interference with this, but I do apologize. Thank you so much for having me, though. I appreciate it.
Oh, no worries. Like I said, this is something that we want ongoing. We want it to keep going. So we will have you again so we can see your lovely face and everything like that as well. But right now, your voice it will do. It sounds nice. So Natasha, if you don't mind as well, share with us, a bit of your story, because I know you're involved with commercial real estate. And Korey was just talking about commercial real estate. Like now, investors are, you know, really open and looking. And even I'll say personally on my end as well. I actually have my feet in commercial real estate. I just got, you know, they're just getting wet right now, but I was actually drawn towards it from, you know, a client of mine. I had a listing that was commercial, and I started getting calls for commercial. So it seems like a lot of people are looking for, you know, businesses. So of course, talk about who you are, and then I want you to more get into, and then you ride horses, you know. So I want you to talk about it all. Natasha, welcome.
Yeah, absolutely. Thank you so much for having me. So yeah, as you said, I'm a real estate agent. I specialize in commercial. I do some residential, but majority of my business is commercial. And like Korey said, a lot of the residential investors are certainly leaning towards commercial based on the fact of the landlord and tenant board has really just caused so many issues for investors, and it's just not fair anymore. Commercial is really quite a better investment in the climate today for Canadians. And that's why so many Canadians are leaning towards that. I have my own clothing line for equestrian riders. So that's totally my passion, but as well. But my focus is real estate, and that's what I do full time. And like I said, I have experience investing in real estate. I actually started with Korey's course, and yeah, it's been a great experience.
Okay. So that's amazing. So when you started with Korey's course, so you were doing commercial real estate, and then but did somebody introduce you to Korey, and then what drawed you in, and then how did you make that first purchase, like for that first property that you had?
Yeah, so interestingly enough, I actually started with a pre-construction condo. I bought in 2016. Actually, no, I bought my first house when I was 22. It was my personal house, so I lived there. It was like a 4-bedroom house, so I did that. And then I sold that, and I diversified and bought pre-construction condos in 2016 before the peak, I guess. So I basically doubled my money on that, and now I rent them all on Airbnb, all of them. And then started getting more interested in the multifamily space. And then that's when I took Korey's course, and I actually got a triplex in downtown Toronto. It was in bad shape, terrible tenants, had to kick them all out. Didn't even really do it the right way. I just kind of started construction, renovating, and they just left because they couldn't take the noise. And I couldn't care less because they didn't even bother paying rent. And then they all went out and renovated the whole thing. And now it's actually makes really, really good money because, again, I'm Airbnb it quite a bit. It's 3 units.
Okay. Yeah. All right. So why Airbnb?
Yeah, for me, it just makes a lot more sense because
I think you cut out, Natasha. Hello?
Coming in and
sorry, Natasha, can you just restart? You cut out for a second. Go ahead.
Yeah, so I choose to rent my units on Airbnb because it just gives me a lot more control over the whole process. I don't have to deal with the landlord and tenant board. I also have control over when the units are filled or not, and I just make a lot more money.
Okay. And I know there are some restrictions in terms of Airbnb, right? What are those restrictions?
Yeah, great question. So a lot of the condos in downtown Toronto don't allow for Airbnb anymore. So that's a huge restriction. Another one is you have to be licensed. So you have to get your license, and it should be only for your primary residence where you live. But there are loopholes around that. But sorry, just got on the plane now, guys. Sorry about that.
Gotta go on airplane mode soon.
Yeah. So there's some loopholes around some of the restrictions. And I'm happy to share some links in the chat box as well.
Okay. All right, that's amazing. So with the commercial real estate, right? I know even with Airbnbs, from what I found, a lot of people do it Airbnb arbitrage where they're getting the units from the owners and then they're renting it out. Is that something that you're involved with as well, or you prefer to buy the property and then rent it out?
So I personally own the properties that I rent out, but I do manage for my personal real estate clients some of their Airbnb rentals. I don't actually lease units and then rent them out, but I do know people who do it. Some of my clients do it, and they're very successful at it. They'll lease something for $2,350 a month, and then they'll rent it out short term and make maybe $6,000-7,000 a month. So that's definitely a technique that works, but you have to be really creative, and also you have to respect the Airbnb rules.
Yeah. So when you said license, so Airbnb has a license, or you gotta be like a licensed professional? It's more Airbnb has their own license here, right?
Yeah, you have to get a license from Airbnb.
Okay. All right. Cool. And then think into commercial, because I just want to circle back there, right? Because that's where it seems like people are interested in, right? So with commercial, what type of properties do you find, turn around the best and the most? Like if someone wanted to go and buy a business or something like that, or even take over a location, like what are you seeing that are transacting the most?
Personally, I have found that the warehouses that I've dealt with are the ones that are transacting the most. However, industrial units were at an all-time peak over the last 2 years. They're actually leveling off a little bit now. So the rents were at a peak and the prices went up dramatically over the last 2 years. I think it had like a 50% increase. But now it's getting back down to it's just leveling off a little bit, the rents and also the prices. So if somebody wanted to come in and buy like an industrial unit, they'll always have rental income and things like that. But another great point that Kory mentioned was these self-storage units. So those are great investments. Multiplexes, like retail plazas where you can have like 5 commercial tenants all paying rent. Another great thing is there's no restrictions on, like there's very limited restrictions on if you want to replace a tenant and things like that. It's much easier than residential. That's why it's so attractive to Canadian investors. And as long as the property cash flows, I think that that's really the most important thing, because of course it will always appreciate, but you really have to figure out and do your numbers. Like with commercial, it's all about the cash flow. Like if the property cash flows, or for example, you have an active business and you're looking for a location that will accommodate your active business, it makes sense.
Okay. So yeah, so when you're talking the cash flowing properties and with the commercial properties, because even Kory was talking about that as well. You just said self-storage, and Kory was talking about the storage as well, right? So yeah, I guess storage is a good thing. So anyone that's on here that's ready to open a storage, they just gave all the breakdowns. They gave down the finance and they gave down and all that stuff. But Natasha, when it comes to financing, what are you finding on the side, apart from just storage, but with businesses? Because I do know, obviously with businesses, to qualify, it's different. It's a different process from home purchasing, but you can still get financing, correct?
Yeah, you can still get financing. You can work with people like groups like BDC, which is a Crown corporation. They give lending to small businesses, sometimes even 100% financing, depending on the financials of that business. If they show really strong financials, in some cases, they can do 100% financing.
Okay.
Like,
and what's the most common though in terms of what you have to put in?
30%.
30%. Okay.
But for example, I actually just put an offer on a restaurant. It will be my client's 5th restaurant that they purchased. And we work with BDC, and they're getting 90% financing because their financials are so good, and they're framing it as an expansion, not as a business. So I highly, highly recommend people who are getting commercial loans and things like that to reach out to BDC if it's an active business.
Wow.
That's amazing for a restaurant.
Yeah.
Yeah, for sure. That's amazing. Yeah. So I honestly, right now, because I know you had more planned, and right now you're on the plane. I don't want to interrupt the airplane, the pilot taking flight, but Natasha, if you could give us any final words, again, would love to have you on a future session. But just for today, any final words, that you could give everyone that's on here.
Yeah, I think what Chloe and the others on here said is just really build your team. Find a great mortgage agent. Like Chloe was very, very informative. So people like her can give you their honest feedback. Just build your team, find the right lawyers, accountants, property managers to work with. I think that's the most important thing. And also analyze the numbers when it comes to commercial property, because you can really tell whether the property is going to make sense based on the numbers. Just break it down. And what your end goal is, like what's the use of the property.
Okay, all right. So that's amazing. So Korey.
Yes, Korey, the math needs to match. That's exactly right. With commercial property, it's all about finances.
Yeah, for sure. And I see Korey has some other notes that's here. Medical commercial is great. Some people drive downtown to get their back cracked. So medical, I guess that's like chiropractors and doctors, dentists, those type of commercial places, right? Because I guess they're there for long term and stuff, I take it, right?
Yeah, absolutely. Yeah, thank you so much for having me on today. And I appreciate it. And thank you guys. Wish you guys all the best. I can't wait to continue the conversation.
Yeah, thank you so much. I appreciate you as well. And thank you everyone for staying through the session. We go from 6 to 9 and everyone stayed on. We had a few that dropped off, but consistently, everyone stayed on. Hopefully you got a good amount of value. We're looking to go back at it again next month, right? And please join us again. I have loads of notes. I'm hoping everyone else here does. All our speakers, thank you so much. I'm so grateful for you guys coming on board. Everyone, please follow them. Let them see that their time was well worth it. Follow them. Go on, and if you want a call, like a consultation, just tap in. Tap in with each other and let's help each other grow. Everyone, thank you so much.
Thanks
Have a good night. God bless. Bye.